that will cause some type of pullback. But I don't think the pullback will be caused by the virus because everyone's sitting around talking about it and waiting for it.
Andrew, thanks so much. Andrew Simon there of Morgan Stanley Investment Management stays with us, and we'll talk a lot more about some of these unforeseen risks out there. We're also getting some breaking news out of the Bank of England. The focus has been on whether they will actually go into negative rates. So we're hearing from Michael Saunders, he's on the MPC, just saying that he sees the risks on the side of a relatively slow recovery. This echoes, Tom, a bit of what we heard from Christine Lagarde. If you have a range on what the economy would do, a lot of central banks are now saying it will be on the slower recovery side. And Mr. Saunders is saying that it's actually safer for the Bank of England to ease too much at this point than too little. We'll see the impact on pound 122.40 against the dollar. On Bloomberg Front Row today, Michael Corbat, Citigroup Chief Executive. That's at 10 a.m. in New York. That's at 3 p.m. in London. And this is Bloomberg.
This is Bloomberg Surveillance. I'm Ritika Gupta. Let's get your Bloomberg Business Flash. Billionaire Carl Icahn has bailed out of Hertz with a loss. He's called off a 6-year bet that cost him almost $1.6 billion. Hertz filed for bankruptcy last week. Icahn had been the rental car company's biggest shareholder. SoftBank's Vision Fund is planning job cuts after reporting about $18 billion in losses. Bloomberg's learned the reductions could affect about 10% of the firm's 500 employees. The Vision Fund is headquartered in London. There are also operations in Tokyo and California. And that's your Bloomberg Business Flash. Tom Francine.
Ritika, thank you so much. We continue with Andrew Sliman of Morgan Stanley, Senior Portfolio Manager, looking at the markets, looking at that mixture of the markets as well. Andrew, I think we've become jaded by where yields are, particularly full faith in credit yields. Unjade us right now. What is the strategy on where nominal and real yields are? What is the to-do list for you?
Look, I'm an equity manager, so I'm not a fixed income expert. But for the fact that what I can tell you is, I think with rates where they are, there will be a continued search for yield in the stock market, and you have a situation where, with the differential as wide as it is, people will continue to buy dividend yielding stocks in the market.
I want to get this in, Andrew. I don't mean to be rude. I just want to get this in because of time. I think it's so important. Do you model in your optimism dividend growth, or does that slip away with this economy?
Well, the problem with dividend growth is that investors have paid a very rich premium for some of the more defensive-oriented stocks. And those stocks are actually lagging significantly coming out. So the small stocks, low volatility stocks, I think people have tended to overpay it. Utilities going into the things were trading at a 100-year all-time high relative PE. That's going away, versus some of the cyclicals that have dividend growth. Those stocks are gaining. So you really have to bifurcate the group.
What is the most undervalued thing that you see out there right now, Andrew? If you look at the world economy, I don't know if it's a sector, and we've been talking about it a little bit by sector, or it's just a region of the world where we haven't focused too much that could actually create the best opportunity in the next 2 to 3 years.
Well, I mean, look, the trick of this business is that you've got to be willing to buy things when it's not clear and not obvious, and the green light is not flashing green. And I think the two areas, if I'd say, well, where would you put fresh money today? Again, not clear, I guess, and maybe I'm a day or two late on this, but I would have said for U.S. financials, simply that value stocks in the U.S. have taken off. The travel and leisure stocks are up significantly. All these value stocks would work, and the one exception is financials. And I don't think financials will be left behind. So they've really started to move. And then the other area, and this is very controversial, but I think we're the cheapest growth in the world right now. The widest is Andrew, the Chinese internet stock.
Right. Andrew, we got to leave it there. Andrew Sliman from Morgan Stanley, thank you so much.
This is Bloomberg Surveillance. I'm Rishka Gupta. Let's get the Bloomberg First Word News. President Trump now faces a tough choice on China. Lawmakers there have approved a proposal for sweeping national security legislation aimed at Hong Kong. Pro-democracy activists say it will limit essential freedoms in the city. The president had already threatened to respond strongly to the move. He could do anything from sanctioning Chinese officials to revoking Hong Kong's special trade status with the US. The Trump administration reportedly is taking aim at Chinese students in the US. According to the New York Times, it plans to cancel the visas of Chinese graduate students and researchers who have direct ties to universities affiliated with the Chinese army. Chinese students form the largest single foreign student population in the US. President Trump's preparing to strike back at Twitter. He's angry because the social media platform slapped fact-check links on 2 of his tweets. Bloomberg's learned the president will issue an executive order that could lead to a flurry of lawsuits against Twitter, Facebook, and other tech giants. It would narrow the liability protections that they have for third-party posts. And SpaceX will try again Saturday to launch astronauts into orbit. NASA scrubbed yesterday's planned launch when bad weather threatened the Kennedy Space Center. It will be the first voyage of American astronauts from the US soil since 2011. Global news 24 hours a day on air and at Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Francine Lacroix in London, I'm Tom Keene in New York, and of course the news flow today is absolutely extraordinary. Something we're not even talking about, which is the, let's call it Republican-friendly Rasmussen poll, came out with grim polling statistics on the president last night. Greg Valliere features that in his note this morning. And that can be one of the themes that we can talk to Martin Schenker about in a 1-hour conversation this morning. The problem is we don't have 60 minutes with Marty Schenker. I've got 5, 6, or 7, and we've got to go, Marty, to the news story of the moment. Marty, I want you to focus on the Washington response, and I really want you to tell our American audience and global audience the positioning of Secretary Pompeo. I think it is a mystery in this original administration. Who is this guy? And what is his strategy on Hong Kong and Beijing?
Well, obviously, Tom, as you mentioned just a few seconds ago, the New York Times broke a story this morning that the Trump administration is planning to revoke the visas of Chinese graduate students who have ties to the military, which is actually a pretty, it constitutes the single largest Chinese student population in the U.S. So that would be a pretty significant move, but it is still short of what we would call the nuclear option, which is revoking their special status.
Okay, that's great, but I have Secretary Pompeo with a strategy. Is that the president's strategy?
I think absolutely Mike Pompeo has the president's ear on foreign policy. He seems to be able to anticipate exactly what Donald Trump wants to do and is able to convince him that these kinds of actions against China are in our long-term interests. And Mike Pompeo is the single closest advisor to the president and does have the president's ear. So I think Mike Pompeo is trying to walk a very fine line here by tweaking China where he can without causing tremendous economic distress.
Marty, will the Chinese retaliate? And will they retaliate, by measure, or will they go actually quite aggressive? What do the Chinese authorities have to lose right now?
Well, so far in this escalating tension between China and the U.S., it has been tit for tat, right? The Chinese have expelled significant numbers of journalists when the U.S. expelled Chinese journalists, restricted the entrance of Chinese journalists into the U.S. So yes, to the extent that there are concrete actions taken by the U.S., you will see incremental reactions from China. And of course, this is still short of revoking Hong Kong's special status, which would be truly an extraordinary step, and I don't think we're anywhere close to that.
Marty, if Hong Kong is I don't know whether you can call it a proxy standoff or whatever you want to call it between the U.S. and China, could it flare up elsewhere in the world?
Well, of course, the next major issue that is on that China is confronting is the issue of Taiwan. So there is the danger that issue could be brought to the fore. I mean, the whole action against Hong Kong came as a sort of complete surprise. So would China feel emboldened to do something similar to Taiwan? It's a real risk that people need to calculate.
Marty, too short a visit. Marty Schenker, thank you so much, our Chief Content Officer at Bloomberg News with lots of experience on Hong Kong and, of course, his service to Bloomberg in Washington as well. Coming up, we haven't talked about gold recently. Dennis Gartman looking at gold in euros or yen. That trade has been successful. We'll catch up with Suki Cooper at the Standard Chartered Bank on gold. Please stay with us. This is Bloomberg.
Bloomberg Surveillance, Tom and Francine from London and New York. Tom, gold is on the rise again. Gains in the precious metal have been driven by rising U.S.-China tensions and speculation over the possibility of negative U.S. interest rates. Well, let's get straight to Suki Cooper, a Standard Chartered Bank precious metals analyst who joins us now. Suki, great to have you on the program. I mean, what needs to happen for gold to go down?
That's a great question. A lot of the focus has been on the upside risks, but one of the big factors that's playing out in the market at the moment is that although investment demand is very strong, the physical market is very weak. So we continue to see strong allocation into the gold-backed ETFs in terms of retail gold demand, but the physical markets and the key markets here are India and China have seen their demand plummet, and particularly driven by the jewelry sector. So if we start to see a little bit of slowdown in terms of investment demand, particularly as economies start to reopen, we could see that downside risk becoming more material.
Suki, what's your take on inflation? So, gold is also linked to inflation and dollar. Some are saying that in 18 months, this is going to be the big surprise, that we'll suddenly saw a surge in inflation.
In terms of the inflation and deflation tug of war, we think there's a greater risk of deflation in the near term rather than inflation. Yes, an inflation environment would be positive for gold, but as we saw after the global financial crisis, huge fiscal stimulus at the time, quantitative easing, didn't lead to the inflation risk, and there are a number of factors behind this, partially technological factors. But at the moment, our base case scenario is that there's a greater chance of deflation rather than inflation, particularly as we're likely to see a decline in the corporate profits and the slow and underwhelming economic recovery that we're expecting in the second half of the year, which wouldn't necessarily create a positive backdrop for gold. But of course, the real trigger will be whether we continue to see negative real yields, and and if we do continue to see negative real yields, then that does create a supportive backdrop for gold.
So the understanding is the central banks will keep buying gold. I'm fascinated by this question, and it's not like a James Bond movie. When central banks buy gold, bars of gold, who do they buy it from?
Much of the time they're buying it from the open market. So there's been a number of factors driving interest in buying gold from the official sector level. And we saw in 2018, 2019, the amount of purchases were the highest in the 51 years. This year we do expect that buying to slow down, but we do think central banks will remain net buyers. And the latest survey conducted by the World Gold Council shows that desire remains intact as well.
Yeah. How much gold do they own on a historical basis? I mean, the knowledge of myself and some of our listeners and viewers that are older is, James Bond, Goldfinger, Fort Knox, and all the other silliness. How much do they own now? I mean, how big a player are they in the microeconomics of the price?
This is a really fascinating trend because over the past 10 years, they have been increasing their allocation to gold. Before then, we had started seeing the gold holdings fall, but now the total holdings across all of the central banks are back at record levels. Our data goes back to the 1960s, and so we're certainly at the levels that we saw back then. But in terms of the total world stock of gold, central banks hold around about a fifth, so close to 30,000 tons is held across the official sector.
Suki, away from gold, I know you also spend quite a lot of time looking at silver, platinum, and palladium. What looks more attractive right now?
From a fundamental point of view, we would still believe that palladium has the strongest supply and demand dynamics. Of course, COVID-19 has had both supply shocks and demand shocks for the whole commodities sector. But for palladium in particular, we think that we're still going to see robust demand driving upward momentum in prices. Across the complex as a whole at the moment, what we're seeing is the metals with the weaker fundamentals in the current environment, i.e. silver and platinum, have seen a rally driven perhaps by speculative interest, given that they've been viewed as being more undervalued compared to the complex as a whole. But we still think the metal with the robust fundamentals is palladium. We still think that the market is likely to be undersupplied or close to balance this year, driving upward momentum in palladium. And we think we can continue to see that momentum driving through into Q4, Q1 next year. And we still think gold has robust dynamics as well, given the macro environment is still supportive, given the unprecedented monetary easing and fiscal stimulus, and importantly, low or negative interest rates lower the opportunity cost of holding gold. So we still think there's upside risk there. So across the complex, we think gold and palladium have the strongest drivers.
Suki, I look at gold now, and I look at the mining of it as well. Is there a lot of new gold coming on?
At the start of this year, we had anticipated modest growth in an environment of elevated prices and the cost of production was under control. We were starting to see a good increase, but we even think before COVID-19, we were starting to see a slowdown in that mine output. But now with the impact of lockdowns and mining supply, gold has had the most number of mines that have been impacted. But in terms of quantity, at the moment we've estimated around about 70 tons, and that's in the supply market of over 3,000 tons, has been impacted. So we're more likely to see mine output stabilizing or modestly lower this year. So although there's a huge number of mines that have been impacted, at this stage, given that we are starting to see some of those operations coming back online, we think that the growth will probably be stinted this year, but we do expect the longer-term trend to remain supportive in terms of supply growth. But this year it's likely to be dented.
Suki, give me a price value here. I mean, I hate to do this, but people want to know, what does Standard Charter call 1 year out on the price of gold?
For Q2, we are forecasting a record quarterly average at 1725. We do see more upside risk for the gold market. We think we might start to see prices stabilizing at an average around about 1,700 for the third quarter of the year, particularly as economies start to reopen. We might see a little bit of a slowdown in terms of that imminent investment demand that's been driven by a flight to quality, flight to safety. And typically, the third quarter of the year is supported by the physical markets. And as I mentioned, that the physical market is incredibly weak at the moment. We saw India's imports plummet to close to zero in April. So we think that physical support will be lacking in Q3, but we think by Q4, concerns around a second wave of infections, perhaps we'll get a better clarity on terms of vaccine, which we don't think will be rolled out and implemented in a meaningful way until 2021. Could we see another lift in prices? So in Q4, we think we could see prices averaging 1750, which would be another record quarterly average.
Suki, thanks so much for joining us. Suki Cooper, their Standard Chartered Bank Precious Metals Analyst. Now, up next, we speak to Jason Farley, Johns Hopkins Professor of Nursing, for a daily update on COVID-19. This is Bloomberg.
This is Bloomberg Surveillance. I'm Rishka Gupta. Let's get your Bloomberg Business Flash. The CEO of American Airlines says that bankruptcy is an option he won't consider. Doug Parker told the Bernstein Strategic Decisions Conference that, quote, bankruptcy is failure. American is struggling with the worst debt load in the airline industry. Parker predicts that no U.S. airline will file for bankruptcy protection. JP Morgan and Bank of America expect a surge in trading revenue this quarter. JP Morgan co-president Daniel Pinto predicts a 50% jump over last year's level. Pinto says it's being driven by strength in bonds and equities activity. B of A CEO Brian Moynihan anticipates a more modest increase in trading revenue, about 10%. Shareholders at Chevron have made a rare move against the energy company's board. They called on Chevron to disclose lobbying efforts and ensure that it backs international goals to fight global warming. The company's board had urged shareholders to vote against the proposal. HP is signaling that the pandemic has disrupted the supply chain of the world's second largest personal computer maker. HP reported that revenue fell a more than expected 11% in the latest quarter. Profit also missed estimates. HP said it is delaying a $15 billion share buyback plan until the market stabilizes. And that's your Bloomberg Business Flash. Tom, Francine.
Now, the Fed is thinking very hard about targeting specific yields on Treasury securities as a way of ensuring borrowing costs stay at rock bottom. That's according to the New York Fed President, John Williams. Well, he spoke to us exclusively.
These are issues that we're, obviously studying very carefully, and we'll be discussing, as a group. So I don't have anything that I can say about what will or will not happen. But really, my view is that the focus is always on just how do we best use the tools that we have? How do we best use whether our communications or our guidance? How do we use whether it's a balance sheet or other actions that we take to achieve our goals? And it really depends on how the economy is likely to evolve. And right now, there's just a lot of uncertainty about that. I think we're kind of in a good place in terms of maybe we're near the bottom in terms of the economic downturn, and hopefully we'll start seeing improvement in coming months. I expect to see a pretty significant rebound in the second half of this year. But really, I think the answer to your question is what's the right policy response and policy action will depend critically on how the economy is performing, not only right now, but which path do we see it on in the coming months. And right now, that's still a pretty unclear picture. I think we're going to get a lot better information over time, really, about have we seen the trough, and are we seeing what kind of rebound and recovery are we seeing?
Before we let you go, I got to say, even though that it's unclear going forward, have you imagine what it's like on the other side? Because I know you think about things like this. When we came out of the great financial crisis, potential growth was lower and around 2% or a little bit less. What do you think potential growth is going to be when we come out of this? And then I want to follow up by asking, are we in sort of a de facto Treasury Fed accord again, in the sense that you're going to have trillions of dollars in loans out at zero or very low interest rates that would really be crippling if rates went up, especially to the U.S. Treasury? Are you going to be stuck keeping rates low, even if you don't want to, for a very long time?
So, Mike, in your first question, it's hard enough to forecast where the economy is going to be going over the next several months or quarters. Forecasting where potential output will be in the next several years is even harder. Obviously, that's a major area of concern. We really want to make sure that those businesses that exist today and households who are able to get through this period, and we don't have lasting damage to the economy, lasting damage to our economy's potential. So that's really the way I view it is the policies that we're taking, the actions that Congress has been taking are really to try to not only minimize the spillovers from the pandemic on the economy, but to minimize the longer-term damage to the economy. In terms of your second question, the Treasury obviously is issuing an enormous amount of debt due to the various spending programs that have passed. But there's also an enormous demand globally for U.S. Treasury securities, especially given a lot of the movement away from riskier assets. So we have not seen any signs recently of a shortage of demand globally for U.S. Treasury securities. Markets have absorbed that increase in supply very effectively. Rates are still very low. So this is not a situation where the Federal Reserve in some way constrained or limited in what we're doing because of what's happening, in terms of the issuance of debt securities by the U.S. government.
Before you go, just one quick follow-up very quickly here to something you said about a trough. We're opening up again. Do you think, barring a second wave of the virus, that we have seen the worst now?
Well, it's hard to say because of the data we have is very incomplete. Like I mentioned, we're looking at a lot of little indicators. We're going to get an employment report for May to give a bigger picture there. We'll get some more data, over the next few weeks and months that I think will help us understand that. But based on what we're seeing now, I think we're pretty close. Maybe May or June will be the low point right now based on what we're seeing. But let's just not forget, this is an extreme decline in economic activity, an enormous hardship for people in this country. So even if we're starting to see perhaps a stabilization there in terms of the economy and maybe a little bit of a pickup, we're still in a very difficult situation.
Well, that was the New York Fed President John Williams speaking exclusively to our Michael McKee. Now, for more on the health of the U.S. economy, we'll also be watching out for the latest release of weekly jobless claims and a second reading of GDP to see if the economy suffered a deeper hit in the first quarter than originally reported. Those numbers out later today. We also keep an eye and a focus on Hong Kong. China approving this Hong Kong security legislation that, of course, defies the U.S. and President Trump. That will definitely be the focus of our new extended surveillance. Coming up, join Tom Keene, Jonathan Farrow, and Lisa Abramovitz for more Bloomberg surveillance, simulcasted on radio and TV.
He leads the company that operates 4 of the most popular cable channels for women, producing a wealth of content distributed around the world. After helping to create MSNBC and CNBC, David Zaslav took the helm at Discovery in 2007, where he moved quickly to streamline the company and relaunch channels so he could take it public all within the span of a year. Since then, Discovery's market cap has quadrupled. And now, Discovery is coming to terms with a new world, one where viewers increasingly turn to streaming services for their programming and are moving away from Discovery's core business of traditional cable channels, leading Zaslav to make the biggest deal of his life, betting once again on content. On this edition of Bloomberg Big Decisions, David Zaslav.
David Zaslav, thank you for joining us. Great to have you.
Great to see you.
So you've just completed the biggest deal of your career, I believe, $12 billion for Scripps. Why did you do it?
Well, it's interesting. There's a financial reason, and there's also a strategic drive that we think could really work for us. Here, we're in the cable and free-to-air business. Scripps is in the cable and free-to-air business. And so we both do the same thing. It's what we do for a living. It's what we know how to do. It's what we do every day when we come to work. And so we feel that we're quite comfortable in putting these two companies together. And the synergy gives us the opportunity to, we think, have a target of doubling our free cash flow. So we generate about $1.4 billion in free cash flow. Scripps generates about $8 billion. And we think we can get to 2, 8, or 3 through revenue synergies by coming up with a lot of cost synergy, mostly cost synergy. And so in a turbulent time, if we can emerge with almost $3 billion of cash, it creates like a moat in a turbulent time. We're different than most media companies in the world, and there are a lot of great companies. But whether it's Disney or whether it's Rupert or Comcast, NBC, CBS, they're mostly in the scripted and movie business. Netflix, Amazon, that whole side of the business is focusing on, as if it was a soccer field, the ball is scripted series and scripted movies. So it's very crowded, it's getting very disrupted, and the number of scripted series have gone from 200 to over 500. And Apple and Amazon and Netflix alone are spending almost $20 billion on top of these companies. So we look at that and we say that we're not that. We're on the other side of the business. The other side of the business is we own all of our content. It's real life entertainment. We see ourselves as a global IP company, whether it's with Oprah, with Discovery, with Animal Planet, with ID and crime or science or cars. And with Scripps having food and HG and cooking and travel, we put it all together now and we're on a different area of the field. And so we say very good luck to them. I think there's a lot of great companies. It's going to be very disrupted. And our game is to take those great brands around the world. And as people over the next few years look to pull content onto devices and phones, we think the functional value of food, home, cooking, science, cars, that we'll do better, or we have a chance to do better, than if somebody was going to pay to watch The Crown on a mobile phone. So a lot of it is about owning IP and figuring out a way to get to mobile where people will pull your content.
Well, let's talk about getting to mobile, because that's the big disruption everybody in media is talking about as a practical matter. How will this help you get to scale, as it were?
Well, we're about 20% of the viewership in the U.S. at any given time. And we have 4 of the top 6 or 7 cable channels for women with HG, Food, ID, TLC, and then we have OWN that's #1 for African American women. So I think we have a great menu to offer to an advertiser. Discovery is in 220 countries. We have an average of 10 channels in every country in the world. So we're kind of a factory machine of driving IP all around the world. And so we could do what very few media companies could do. We could do a global offering of food. We could do a global offering of all of our content.
In this new world of streaming, will viewers be watching for platforms like HGTV or Discovery, or will they be looking for programs like The Crown, like Game of Thrones?
Well, it's hard to tell behaviorally exactly what people are going to do. But by doing this deal and generating free cash flow and taking a look at the assets that we have, by owning science globally, by owning every piece of IP that we own effectively, except for sports, we're long IP. We've spent a lot of money to own it on all platforms. And that gives us the opportunity. If Amazon said, I'd like to do an offering globally, the only other media company that could do that would be Disney, and it would be in the kids space. And so we would raise our hand and say, terrific, we have a great family offering. And so for us, it's about the long tail. And we think in the end, people that love food are going to pull it. We're not sure exactly how it's going to work, but we think the fact that we own all of our content and we have passionate viewers that they love us like they love a sports team. They'll come home and they put on HG all day long, or they'll put on food. And so we have a sustainable growth business with our synergy. And then we have all this IP that we could take direct to consumer, and we've started to do it.
Can you win in streaming without going through the bundlers? I mean, do you have to be on Hulu? Do you have to be on YouTube? Or can you do it directly? Is your product strong enough?
We don't know. Everywhere else in the world, we're on almost every skinny bundle. Here in the US, we're in most of them. We're not on Hulu, and we're not on YouTube, but we're on most of the others. And people love our channels. And so, one, we think that over time we'll get on those skinny bundles. We hope to. We'd like to partner with our distributors because they helped us build our business. And in many cases we are. We're partnering with AT&T on DirecTV Now. We partner with Brian on Comcast on his offerings, with Charter. So that's the best way to do it, kind of regionally. But there is an opportunity for us to go direct to consumer ourselves, which we're already doing in a number of areas, in cars and in sports. But we could also go to those big companies. If you take a look at what NBC, ABC, CBS, and Fox spent 3 years ago, and how much is being spent by Amazon, Netflix, Apple, and Google, there's a massive amount of share shift that's going on there. And these are real global companies, the likes of which we've never seen before. So if any one of those companies wanted to offer for $5.99 a compelling family-friendly service, we would either be most of it, we would argue we'd like to be most of it, or we could be all of it and see how it goes. Because anywhere you go in the world and you say Discovery or Animal Planet or ID or Oprah, people know our brands and they value them.
How will you make that decision about whether you go direct to consumer or you go through middlemen, essentially? How do you make that decision as CEO?
Well, look, right now it's not a fair fight because the direct-to-consumer businesses, the Netflix, the Amazons, we in media used to trade at about a 14 multiple because the view was that this great dual revenue stream cable and free-to-air business would go on forever. And the view now is that it's getting disrupted by some of these direct-to-consumer platforms that are global. There's a question of who's going to emerge and be the winner. We think, looking now, it's only the second or third inning, but we've carved out a very compelling spot of quality brands that people love, that we can offer globally, and we could offer them ourselves.
You stepped up big time on sports. That was a variation from what people had expected from you. Why does that make sense for you? You talk about disruption in media. There was a time not too long ago when you were the disruptor in chief, in some sense. I watched you from Capital Cities ABC across the street as you created MSNBC and NBC. You created CNBC. How does this compare with that disruption when you disrupted broadcast? Basic cable came in and really disrupted it. How does it compare? What did you learn from that experience you can apply now?
Patience. In that case, Jack Welch and Bob Wright were committed to try and take the broadcast business into cable. For people that were around at that time, it was pretty unusual. And it's important because the business that you think you're going to launch that's going to work is never the business that works. The audience is always going to tell you what they get nourished by. And that's what our business is about. That's what most businesses are about. When we launched with Oprah, the Oprah Winfrey Network, we had a dream, Oprah and I, that it was going to be about living your best life. And we looked strategically at the space and said, we can do this. But when we went out with the content, Super Soul Sunday worked terrific, but a lot of the other stuff was too earnest and the audience went away. And we had to figure out, what are they going to come back for? And it took us a lot of years, but we started to listen, what do you like? That's what our business is about. We don't want everyone to watch, but the Oprah Winfrey Network now is the #1 network for African American women. So for us now, we've broken our company in half, essentially. We got half the company that's about growing our channels, doing what we believe we can do as well or better than anyone in the world. Then there's a whole group that has to figure out, okay, how do I get over the top? What do people want when they consume content over the top, you know? And I think you have to be willing to recognize failure and use it kind of optimistically. Good, we know that now.
And you can do it without the blockbusters.
The way people watch our channels, it is hit driven if you're a broadcast network. The way people watch our channels, they come home and HG gets me. Discovery is my channel. TLC in Middle America is the channel that I love. I love Oprah, that's the channel that I watch. That's how they curate. Where do I get nourished? That's the business that we're in. We think that's going to be sustainable, and we think that ultimately they could either pull one of those really big, expensive platforms, or when they're looking to pull something that they want that's family friendly, with brands they know, characters they know, everywhere in the world, for a lot less than they would have to pay for that, we look different. And we got to, over time, we'll see if it's an aggregated offering, if it's an individual offering, but I think we got a game. But the first thing we got to do is execute on this.
You stepped up big time on sports. That was a variation from what people had expected from you. Why does that make sense for you?
Well, first, we're in every country. So when I say we're in every country, we have a sales team, we have a distribution team, we have creative people, we have marketing people, and we have strategic people. So we kind of know each country. And so when we looked at sports, Eurosport was not being individually fed into every country across Europe. So when we bought Eurosport several years ago, we looked and said, we can use our sales infrastructure. We could use our distribution infrastructure to drive more carriage. We could use our sales and marketing people. And it was a little bit of a leap, but it was driven by the idea that content used to be about getting inside of the television box, that rectangle. And even if you had content that was just okay, second or third choice, you did okay. When we launched our direct-to-consumer sports player 3 years ago in Europe, so we reach across 750 million people in Europe. We have the tennis, we have the cycling, we have the winter sports, we have summer sports, we have the Olympics. So we figured we have a great offering. 750 million people, $8, we should be able to do terrific. And we wrote 10 things that we thought we knew for sure. 8 of them were wrong. And the users told us. They said, okay, you know, we tuned in for the French Open, but we didn't want to watch Tour de France. We love tennis. Or they told us that maybe the most interesting takeaway that we applied to the Olympics is that when people consume content on a device, they expect to hit the device when they get up in the morning and see content. And then they expect a few hours later to hit that device. You need to multiple publish. So if speed skating is starting at 2 o'clock in the afternoon, the people that love speed skating have to get up in the morning and see a 1-minute video or 2 one-minute videos or some information about, and we downloaded 700 pieces of short-form content in 21 languages every day to our Olympic player. And that's one of the reasons why we were able to aggregate about 500,000 subscribers. They love the sports IP, But they really, when people look at content on a device, they expect to be entertained and nourished whenever they hit it. And if you hit it and nothing is new, you're disappointed.
Can you do that and not step up into the really high-priced sports projects? Because that, to some extent, sounds a little bit like ESPN in the United States in the early days. They had lesser sports, and then they had to get in the NFL, they had to get in the NBA, and that, as you know, costs enormous amounts of money. Can you have a strategy that stops short of that?
Well, opportunistically, we have taken football. But we haven't taken football where we get in a bidding war with anyone. If you want to offer your content on a pan-European basis, there's only one place to do it, us. Or if you're a federation, if you're the Speed Skating Federation, you could sell it in every country. And the difference between the US and Europe is in the US, it's one culture, one language, and everybody likes the same four sports, essentially. 90% of viewing, 80% of viewing is football, baseball, basketball, hockey. In Europe, there's a lot of sports that are number one in Northern Europe that are number 10 in Southern Europe. And if you're a federation, we're the one stop. And we've been very effective about getting a lot of content. And all the sports content we have with Eurosport, we've, as much as we can, we've gotten it long term, and we own it on all platforms.
You have scripts, as you say, you need to execute on that now. But is that enough for Discovery? Are you on the outlook for further acquisitions?
This is news, but not as you know it. This is TikTok by Bloomberg, the first and only global news network built for Twitter. 24/7 news streaming live on Twitter.
have scripts, as you say, you need to execute on that now. But is that enough for Discovery? Are you on the outlook for further acquisitions? Do you need to get bigger scale?
Well, look, as I said earlier, we're in a different place of the soccer field than everyone else. So we think if we could execute on this, own all those passion brands globally. Scripps never took food and HG and cooking and travel around the world. So we have an opportunity to take all that IP, we'll convert it into 48 languages, and we'll start to spread it around. So that'll be a revenue synergy if viewership increases, and we think it will. In Latin America, we've bought some of their content. But I like our hand here. We got some work to do. We got to pay down some debt. We got to prove out that we're going to generate that free cash flow and that we really did build a moat. But at the same time, we're going to be working really hard about learning how consumers consume content on devices. And we're talking to every distributor, because we're better off if somebody that's already in business with you and you're already paying a $100 bill can then have a chance to check a box and pick us. Today in the U.S., there's probably 25 or 30 million subscribers that are broadband only. The one service that's being marketed to them heavily is Netflix. And the industry built us, we built them, and together I think we're going to come up with something that's going to be pretty compelling in terms of a skinny bundle, because it's not sensible to have Netflix have all that field without us on it.
You said you need to pay down some debt because you do have more debt on your balance sheet than a lot of other media companies do. You said you're going to save $350 million a year on Scripps. How are you going to do that? That's a lot of money, as you and I both know, to save in an operation.
Well, look, as we've looked at putting these businesses together, and it's early days. It's only been 5 weeks, but we've been working on it very hard for 6 months going up to it. We think that's rather conservative. These are one-over-one companies. We have 12 channels in the U.S. They have 6. So we're in the same business. We have 220 research people. They have 140 research people. We have 650 salespeople. They have 550 salespeople. And their people are really good. We put some of their people in charge in our new structure. And the idea is, who are the best and the brightest? Because when we looked at it, we said, when it comes to nonfiction, who are the best 2 producers of nonfiction content, and who is best at monetizing it? And we looked and we said, in some areas they're better than us, in some areas we're better than them. We put these 2 together, and we will spend $3.5 billion on content, maybe growing to more than that. This is a hard business. We're in the business of creating stories and characters and getting people to turn on their TV and love it.
You've referred a couple of times to John Malone, who's a shareholder, doesn't control your company by any means, but you know him well. What is it like to have John Malone as somebody you can call up and say, should we do this, should we do that? What do you think about what's going on?
Well, I think about my last 30 years in this business, and it's sort of like what you want for your children. You are who you hang out with. And it really helps define you, the narratives that you hear, the questions that you hear. And so I look back over the last 30 years and 15 years listening to why Jack didn't want to do an acquisition that we brought him, or what we need to do with cable, or how we need to do it. Bob Wright, one of the most successful guys running NBC, the Newhouse family, Donald and Cy Newhouse, and Bob Myron, who's a genius and has been in the cable business and built Bright House, and John Malone. And so when I think about where people should be spending their time, yes, you'd like to get the right job. Yes, you'd like to think that you're going to make some money. But I took a 50% pay cut to go to NBC from a law firm because I thought I can get to hang out with the guys at the Peacock, and maybe someday I'll get to meet Jack. And a lot of the way I see the world, I still talk to Jack all the time. So I'm hearing Jack's voice, I'm hearing Bob Myron and Donald Newhouse's voice, and I'm hearing John's voice. And so for that alone, I'm one of the luckiest guys.
It strikes me that you're now running Discovery, which really appeals in the United States to a lot of the middle of the country. People that the President of the United States probably wouldn't object to. In fact, I understand the President of the United States is a fan of Shark Week. Actually, I read that someplace.
I hope he's a fan of a lot of our stuff. I think, I hope.
You helped create MSNBC. That is a channel in a very different place. What do you think about the media landscape today in the United States in terms of politics? Because it seems to become much more polarized.
Well, I can just say that the business changed. When we launched MSNBC, Brokaw and I and Andy Lack and Tom Rogers, there was a group of us, and Jack said, we're going to launch the best news network in America, and we're going to use the #1 news division in the world to do it. We had this amazing library. We structured a deal with Microsoft to get them in. They wanted the library at the time, and that was our ambition. I'm not going to game out the different news networks in America, but we have to be practical and recognize that at least some of them are following that model, because you on the one hand you want to do the best journalism possible. On the other hand, you want people to watch you, and you want them to watch you for as long as possible. And part of the way we as human beings determine our success is, are we in third place? Are we in second place? How many people are watching us? How many people love us? And so I think that's the journey. And luckily, I'm not going to be one of the guys to figure that out.
Well, but let's talk about how you keep score. That leads us exactly to a great conclusion here. How do you keep score? I mean, I see that now you've jumped up in the rankings, actually, including broadcast and cable. Big step up with Scripps. Is that the way you keep score? Is that how you just tell whether you, David Zaslav, are succeeding?
No, because there's lots of books that have been written about, more scale tips you over. So we're staying in our lane. And what's going to be successful for us, and we've made this decision. On every one of our channels, we've said, if you don't love us, if you're not one of the passionate viewers that loves survival, if you're not one of the people that love science or that love crime, go find some other channels that you love. When we're creating content for our channels, we want global audiences that really affiliate and have a passion for our characters and our message. And a big piece of that is we're not going for the best rating. We're going for the most potent audience that says, they get me. When I go there, I see something that I love. And if we put something on any of these channels that looks like we're going for ratings, they'll immediately say, what's this doing on here? And so they're quite clever, and you just got to continue. This is what we do for a living. Figure them out on TV and try and figure them out in terms of the devices as to what they're going to love and what they're going to pay for.
David Zaslav, thank you so much for spending time with us today.
Thanks, David. Good to see you.
Coca-Cola, a 130-year-old iconic brand and a dominant force in the $800 billion soft drink industry. Synonymous with globalization, Coca-Cola operates in over 200 countries worldwide. The beverage behemoth now has a new CEO. James Quincy spent the last 2 decades rising through the ranks at Coca-Cola. Now, as head of the company, Quincy aims to win over a new generation that shuns sugar, and to show the world that he takes the environment seriously. even as he adapts to a new world of technology. James Quincy sat down with us for an extended conversation. We wanted to understand how he plans to use innovation to transform every aspect of Coca-Cola, attempting to change its culture while managing a global checkerboard of regulations and tax regimes.
Coca-Cola operates in a lot of different countries, which means there's a lot of different regulatory systems, a lot of different legal schemes you have to really adapt to. Let's talk about a couple of those. First of all, the United States. The tax cuts. How does it affect Coca-Cola?
Yeah, we're still working through the numbers. I mean, our tax rate last year effectively was about 24%, so it's not the biggest change to us. Because we're an international company, the absolute rate hasn't affected us as much as perhaps some of the more domestically focused enterprises. But we're positive on moving the territorial system. So we think the simplification is positive in the long run. To the extent that it helped create more demand, that will be good news too. We're still working through the numbers that we'll lay out on our earnings call. Of course, we're part of having some of the money overseas, but in the end, if it generates more economic growth, that will lift all the boats.
Does the expensing of capital investment affect you at all?
Not in a great amount. I mean, it will make some difference. We'll lay that out, but that's not the biggest moving piece for us.
And if there is significant incremental cash available to Coca-Cola, have you decided yet, does it go into capital investment? Does it go into buybacks of shares? Does it go into dividends?
I mean, we weren't short of cash at the end of the day, so we've been a successful company. We've got the resources we need to invest in the marketplace. We're still working through exactly how the puts and takes work, because obviously you've got to pay tax on the cash first, or in addition. So we're looking at how we use all that and how we make the right capital allocations.
One of the really big issues for the United States right now is the so-called dreamers. These are the young people who were brought here as children. And the question is, do they get to stay as adults, essentially? Do you have at Coca-Cola people who are really uncertain about whether they can stay or not? There are about 700,000, more or less, nationwide.
Yeah, we have some people in our company and in our bottling partners who fall under the Dreamers or the Dakar program. We would love government to find a way to make proper underlying immigration reform, and including finding a solution for the Dreamers so that it's not so disruptive and that they can stay. So hopefully they'll find a path to that. Of course, partial solutions may be necessary, but we would love to see fundamental reform.
You ran Mexico for Coca-Cola at one point, so you have seen this issue on both sides of at least our southern border. Do you see a path forward, a constructive path forward on immigration?
I think there's a path forward, but I think it also is connected, and it can't be completely disassociated when you think about long-term fundamental reform from getting both economies to grow. In the end, part of what drives the informal immigration is the disparity in the economic outlook. So having a community of North America where all the economies are growing actually helps solve that problem too. So I think leadership from the United States to drive growth will help solve some of these other issues too.
You've also seen NAFTA from both sides of the border. You've seen that issue, which is another hot issue right now in the United States. Has NAFTA overall been good or bad for the United States?
My view would be that free trade deals are good overall for all participants, and I think it's been good for North America and all the countries in it. Doesn't mean it's perfect. Very few free trade deals are perfect, so can it be made better? Yes, I hope they can make it better, but I don't think we should start deconstructing global trade. I think it's been a powerful engine for lifting all boats. It doesn't mean it's solved all problems. There are questions of income inequality. There are questions of not all the rules were perfect and need to be improved. But let's go forward, not backwards.
So when President Trump first came in, he was very closely allied with many people in business. He consulted and he had panels that he talked with as well. Do you get to talk, either President Trump or the administration, about things like NAFTA? I mean, do they consult you, or do you make your views known to them?
When there are things where we have a view or it affects our business, we make our views known either directly to the administration or through many of the business forums, like the Business Roundtable. There are enough points of intersection collectively and individually with the administration that they know what we think.
So from that, do you have any sense of where we're headed with NAFTA? Because there are conflicting reports. I mean, the Canadians seem to be preparing for actually U.S. withdrawal. There are a lot of people in Washington saying, no, we're not going to withdraw. Do you have any sense from your point of view of where we're headed?
My view on negotiations is you've got to let the negotiators negotiate. And if you're not in the room, you don't know what the answer is until it comes out. So I think the important thing for those that aren't in the room is to keep saying what they believe to be true, what they believe to be the areas where things can be made better. And then the negotiators have got to get in the room and thrash it out, and trying to work out what color the smoke is coming from the room doesn't lead you anywhere until they come out and tell you what the answer is.
Your native country has voted in referendum to leave the EU. And I won't ask you what you think about that, but tell us how that's developing. I mean, is there a soft landing there that you can see? How would we get to it?
It does a bit go back to my point about negotiations. You're never really sure until the cake is cooked. I think the logic of the economics is a softer rather than a harder Brexit. I think in the end, whilst it won't be a catastrophe one way or the other, life will be better. There'll be more economic growth if it's a softer Brexit, but there's a lot of details and a lot of different points of view to work out, because in the end, the referendum wasn't between do you want this or that. It's like, do you want this or not want this? It wasn't a referendum around the version of the exit, which is kind of where we're trapped at the moment. And of course, there's a lot of negotiations going on. It's very important to get it right for the UK and to some extent for Europe as well.
Whether it's Brexit or whether it's NAFTA, how do these trade issues affect Coca-Cola's business?
I think one of the great benefits of the Coca-Cola system is we're global, but we're extremely local. I mean, we manufacture in every country virtually that we sell in. Virtually everything that's sold in the US is made in the US. Virtually everything that's sold in Mexico is made in Mexico. Virtually everything that's sold in the UK or France is made in that individual country. So the global trade restrictions or openings don't tend to affect us heavily in the moment. To the extent that they reduce or increase total economic growth, that's what matters to us. And so I think philosophically we're pro global free trade because it drives economic growth. Therefore, let's focus on making those deals better because it'll provide the wealth to then solve a lot of society's problems.
You came in and took over Coca-Cola and really trumpeted innovation as critical to your future. I believe you have a chief innovation officer, but maybe you're the chief innovation officer in some sense. How do you innovate in a 130-year-old company that's so well known around the world, has been there for so long, has such an entrenched perception in people's views?
It's hard. I mean, any institution that's been around a long time, whether it's a company or a government or any organization, it's going to be very hard. So I think, from my point of view, if I'm not the chief innovator, I'm certainly the chief agitator for innovation. And what that means is, driving the culture to try and do a few things upon top of everything else we do. Stay curious. If we're not curious about the outside world, about the consumers, about the customer, about what's changing, how will we innovate? But curiosity just leads you to an insight. It's very passive. You need to drive empowerment so people feel they can go and do something, that they're not waiting for head office to make the decision, that they can get up in the morning and go and do something. And I think the next thing is you've got to be inclusive. You've got to try and connect the pieces because we've got a tremendous global knowledge and tremendous global system. Sometimes your idea has already been tried somewhere else. So connect to the other parts of the system. And lastly, we probably fell into the trap of trying to make things perfect before we did anything in the past. No, we need to learn from some of the software companies, have version 1.0, 2.0, 3.0. That gets us both innovation and speed. And if we keep pushing those four things, I think we'll make progress.
And how do you know? How does James Quincy know whether you're getting the innovation job done? And I mean that in the sense you're sitting atop a very large organization, a lot of people spread around the world. How do you judge whether the word's getting down and people are already changing their behavior?
It's hard to know, but the only way forward is to look for multiple signals. No, there's no one number or one metric that's going to give it the answer. So we have employee surveys where we ask people. We can look at the sales number and measure the success rate or the number and the success rate of the things we put into the marketplace. We can look at what our research and development pipeline is generating, and are we really getting new patents? Are we really making progress? So I think one has to have a dashboard to look across and say, is there progress?
How is technology changing the way you do business, and for that matter, your workforce?
It's news, but not as you know it. This is TikTok by Bloomberg, the first and only global news network built for Twitter. Objective reporting that you can trust. Curated comments that provide insight. TikTok by Bloomberg. 24/7 news streaming live on Twitter.
Technology, it's disrupting just about every company that we know of today. How is it affecting Coca-Cola? And first, talk about how it's affecting your relationship with your consumer. How you deliver to your consumer, things like e-commerce, how you market to your consumer.
Yeah, I mean, we kind of look at it in three buckets. How we engage with consumers, there used to be TV advertising, now there's social media. The ways of engaging with the consumer are changing rapidly. Who the customer is and how the shopping actually happens is changing rapidly. And of course, internally it's changing rapidly. With the consumer, around the world, TV is still the biggest vehicle, maybe less so in some of the developed economies, but around the world it's still the biggest vehicle. But a lot of it's going into social media. We work closely a lot of the new tech companies in social media, trying to find ways to continue to have a brand role. I mean, in the end, someone's got to pay for the content to be developed, whether that's through advertising or sponsorship. So I think there's a lot of change going on. We're adapting. I think we feel we're kind of towards the front end. But what I'm totally clear of, it's going to be different in 5 years and it's going to be very different in 10 years. And we're going to have to keep investing in innovation and keep evolving to stay close to the consumers.
As you look around the world, which markets do you see the fastest innovation when it comes to e-commerce? When we just sort of get on your app and you order something up, it gets delivered, for example. Is it China? Is it the United States? Is it Europe?
I actually think that places like Shanghai and some parts of Western Europe are on the cutting edge, along with some of the bits of the US, but really at a par. I mean, the US in many respects, there's a lot of advanced e-commerce, but I can tell you it's very advanced in places like Shanghai and Western Europe as well, and the penetration of e-commerce in aggregate is even higher in some of those places than even the US. So, when you want to learn what's going on, I would be just as tempted to tell you go to Shanghai as stay in New York.
And how do you market in that circumstance? I mean, we're used to going to a fast food restaurant, for example, and there's a Coca-Cola there. It's on the menu.
Yeah.
So let's have that Coke or that Diet Coke.
Yeah.
You don't have that when you're on your app.
No, but you have to get it. I mean, you know, if you went back even 2 or 3 years in China, for example, when a lot of the apps and the mobile payment systems came in, we weren't on the menu. Actually, even worse, we were trying to sell perhaps a returnable glass bottle to the restaurant, which had no way of being in the delivery system. So we've had to re-engineer our business system very quickly to both be present on the app. So what's the virtual representation of what you'd normally see in the store? And how do we change the packaging portfolio so that we can be part of the delivery system? And you have a lot of places in Shanghai where food ordered on apps and delivered is 30-50% of the restaurant sales.
That's the relationship with the consumer. Talk about Coca-Cola as Coca-Cola. How is technology changing the way you do business, and for that matter, your workforce?
It's changing it in lots of profound ways. I mean, in simple terms, you know, you go back 10, 20 years, we were a large company and we're one of the few that could afford to invest in expensive IT systems and do our own stuff, our own programs, our own server farms. You wind forward to today, that's no longer the model. We've had to move to the cloud. We've had to move to standard programs that whole industries use, and we've had to use the mobile. The one thing I always say to the IT department is, just put it on the phone. Everything can be done on the phone. Let's just move everything to mobile on the phone. The old days of IT had training budgets. Why? Everyone knows how to use the apps on the phone. So it's profoundly changing the way that we work, and I think it's going to continue to flow through the organization. We have a big program of digitizing the company.
Does that translate into fewer employees as a practical matter because of the efficiencies from digital?
I think it for sure it changes into a different profile. I mean, people are having to adapt to doing things in a different way. We've actually made a lot of changes in our IT departments to move to a different skill set. So it's certainly changing the nature of employment and the sorts of profiles you want. Whether we buy the services ourselves or we buy the services or do it ourselves makes a difference as to where the employees are. But net, more employment's being generated in the economies.
So can Coca-Cola compete with Silicon Valley and the digital startups when you're trying to recruit the young computer scientists?
Well, Atlanta is a very fast-growing economy. The state of Georgia has been ranked, top 1 or 2 of place to do business in the U.S. for many years in a row. The local political system has done a great job. So has the city. So it's a very competitive economy there, and we do very well in it. We're happy to see Atlanta and Georgia growing, and they've done a lot to invest in tech startups and the media industry in and near Atlanta, and it's being very successful.
As you look toward really substantial growth in these new beverage categories, are you looking at acquisitions? Are you looking at organic growth? I mean, you have been inclined, I believe, to look for smaller brands, startup brands, bringing them along. Is that the future path to a significant degree for Coca-Cola?
I think it's going to be both. I mean, we have grown organically, but we have made these bolt-on acquisitions, as we call them, the little small ones, the niche brands. I think where we see that something is a really good idea, we invest in them. Sometimes we buy them, sometimes we just invest with them. But there's a quid pro quo. They get the capital that we inject, yet we can introduce them to the globe, not just the country that they've launched in. And that's helped us double the number of billion-dollar brands that we sell around the world. So I think it's going to be an and strategy rather than one or the other.
It's interesting. It's a total beverage company. It's not a food company. I mean, there are some competitors who said, let's become a food company, at least in part. Why did you make that decision? And does it make you any more vulnerable, forgive me for saying, but even to acquisition? I mean, you're $200 billion market cap. It's a pretty big acquisition. But there are some pretty big consolidations in the food industry out there.
I think firstly, we're focused on beverages because that's where the greatest synergy and the greatest application of our know-how and our fabulous global bottling distribution system is. It's the thing that can be most synergistic with what we've already got. And the market for beverages is one of the best growing markets in the whole of the supermarket or in the other stores. So it's a great market. We have a good position. We can create a lot of synergy. So it's a question of choices. I sometimes say never say never, which then causes confusion because people say you haven't ruled anything out. I say no. It's a question of what's most logical, and beverages are the most not logical thing for us to do first because we stick to our knitting. In terms of how we think about the consolidation, in the end of the day, I'm pretty convinced that investors, gold star goes to those that grow with expanding margins. Growth is the name of the game. If the category's got no growth, then optimize the margin. Okay, but that's still silver prize largely over the long term. So I'm pretty clear. If we focus on driving top-line growth, which we believe we can with our strategy of total beverages. We will attract an investor base that will be very happy with us over the long run.
By 2030, you want to be getting a bottle back for everyone you put out there. That's a lot of bottles for Coca-Cola. How are you going to attract all that plastic? World Without Waste, great goal. You have a big new packaging announcement. Why is it important to Coca-Cola, not just as a corporate citizen, but as a business?
You know, it's important to us for a very core part of our values. We've always believed that to have a healthy business, you need to be operating in a healthy community. And one of today's biggest problems is packaging waste. We've done a lot on making things recyclable. We've actually invested a lot of R&D in making progress on reusing it. What we need to do is collect it. So this announcement is about the big missing piece in generating a world without waste, which is collecting back the plastic and creating a market economy for that collected plastic. And I think that's going to do great things to help us grow into the future without creating waste, which is good for us and it's great for communities.
How are you going to attract all that plastic? By 2030, you want to be getting a bottle back for everyone you put out there. That's a lot of bottles for Coca-Cola. How are you going to attract all that plastic?
Well, to give you an idea of the dimension, we need to bring back, every person in the world, if they bring back 2 bottles a month, we bring back all our bottles. That's our objective. 2 bottles a month for every person. We collect every bottle we put out. How are we going to do it? Well, there'll be different systems in different countries. You know, every country needs a solution, but it won't be the same everywhere. There are kind of places where it's reasonably advanced in Europe, to more informal economies where the collection happens. So there's going to be different solutions everywhere. We're going to have to work with NGOs, other industrial companies and governments to put in place these solutions. But it's absolutely doable. And I think that's what's exciting about setting the objective.
We're very conscious of this in the United States, but what about in other places, like China, for example?
Yeah, look, I think the emerging and the developed countries are where more of the problem is than the US or Europe, which is probably at the leading edge. So we need to do more there. But recognize in a lot of these countries, there is some informal collection system already going on across a wide range of waste. What we need to create is the circular economy. We need to create value for that. So often in the case, and we did this in Mexico, for example, you go back a little more than 10 years, it was less than 10% of the plastic was recycled. Now it's 60%. How? The informal economy was collecting the waste, but there was no market for it. No one wanted to buy it. So we went into the marketplace and bought the plastic, invested in factories to recycle that and reuse it in our bottles. So I think there's a model there for the Chinas and other parts of the world on how to create value out of plastic and get it reused.
You've laid out a bold strategic vision for your company called Total Beverage Company. that includes things beyond Coca-Cola and even beyond Diet Coke. It goes on beyond that to these 5 categories. What's driving that? Is that basically to get away a bit from sugar drinks?
Actually, you know, we're following the consumer. When you look at what's happening around the world, as the world is urbanizing, as people have got more disposable income, they're spending more money on a range of things, including beverages. So what's important within that growing market of beverages is they want more choice. Different people want different things. So if we really want to be able to serve the customer, serve the consumer, we've got to follow them. We've got to get into more categories. Coke is likely to remain the heart and soul of the company. It's the world's biggest fast-moving consumer good brand. But we need more. We need to offer consumers what they want all day long. We have to offer choice. And I think that's what's going to guide us forward. And in a way, it goes back to where we started. If we pay a lot of attention to what the consumer wants, they will take us to where the business needs to grow. And then it ultimately ends up in growth for the business.
I understand that on average around the world, people consume about 8 ounces of a beverage per day. And Coca-Cola, I was told, is about a half an ounce. What is your goal? How much of the market share of total beverage can you really take globally?
I don't think there's a end of history moment when we reach nirvana. I think what we're looking to do is gain share every year. I mean, it's a competitive marketplace. We have a lot of well-funded competitors doing a lot of exciting things. So we're focused on is can we serve the consumers and gain a little bit of share each year and generate a growing business system that our objective is to create value for everyone who touches that business system, whether it be the economics of the people who are in the value chain like the customer, or even society with initiatives like the packaging one, you know, which I think builds on our heritage of creating shared value in the world. 10 years ago or so, we set ourselves the objective of being water neutral by 2020, and we achieved it a few years early. So we return to the environment all the water we use, which is one of the things that gives us confidence that we can achieve this packaging objective. So we get business growth and doing it in the right way for society.
Okay, thanks very much. We're wrapping up there. This was terrific. Thank you so much. That was really fun.
Thank you.
Bloomberg is the standard for diversification in commodity markets. With full transparency, measure and monitor your investment performance against the benchmark used by commodity professionals globally. More than gold and oil, the Bloomberg Commodity Index.
It's hard enough to forecast where the economy is going to be going over the next several months or quarters. Forecasting where potential output will be in the next several years is even harder.
The behavior of the U.S. stock market is very unusual. Every other financial market essentially is pricing in something closer to a euro.
Economic forecasts are hazardous at best. They're even more so now.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow. Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. We welcome all of you to our simulcast. John says simulcast. I say simulcast on television and radio worldwide. Thrilled you're with us today. Coming up, a really important conversation on the global markets. The news flow today, absolutely extraordinary. We've really been focused on Hong Kong with conversations with Christopher Patton and Jonathan Fenby. But John, right now, we've got to turn to the American reality, which is claims surveyed again to be over 2 million.
Median estimates on 2.1 million. A lot of pain. We're near, I think, around 40 million over the last 2 months or so. So quite clearly, the labour market is in an absolute mess. And for a lot of people that make up that statistic, Tom, it is really painful. I think it would be a mistake to think the policy effort was done. It's not. There's certainly a debate down in Washington on what to do next on the fiscal side. But let's not forget the monetary policy side either. The ECB meets next week. They've been flirting with doing more. The Federal Reserve meets the week after. And I think we have to transition now away from an emergency response to forward guidance, the future. What does policy look like? That's going to be where the effort transitions in the next several weeks, Tom.
I really agree on the idea that we're really shifting to forward guidance. Lisa, part of that is the bond market, the debt market reaction to all of this. And it's got to be a better, a more constructive debt market after you see what equities have done.
Well, and we have had, yields have absolutely been flat or going down, certainly in the corporate debt market. I just want to build on something that John said, and I think that report that we're going to get today, showing more than 40 million job losses over the past 2.5 months, highlights a shift from temporary job losses to permanent job losses. And I wonder how much the policy conversation is going to change and how we reskill individuals to take over a new economy, given the fact of the job destruction that we're facing right now.
Well, we'll have to see. John, once more before we get to Thierry Weissman, really thrilled he could be with us right now. John, what part of the market, what part of the data check this morning interests you? To me, it's boring, but it's not, isn't it?
No, I think what we've got to focus on in the equity market, Tom, is whether this cyclical rotation continues. Lift the lid on the indices. Lift the lid on the S&P 500. See what's moving, what isn't, what's lagging, what's leading. That's been the story of the last couple of days. We've had some head fakes over the last several months. That transition away from the defensive growth, so to speak, the tech names. And I think we're all trying to work out how sustainable the reopening rotation is in this equity market. That, for me at the moment, seems to be the focus, Tom.
On radio and television, a must-listen for Global Wall Street right now. Thierry Weissman is just really a most remarkable strategist, because he's not. He's Vassar in Harvard economics, acutely sharp on emerging markets and international economics, and pulling that into a strategy for Australia's Macquarie Bank, and we're thrilled he could join us this morning. I've got to go right to the dollar and the dollar dynamics, Thierry. The president, I think he wanted weak dollar, and now I think he wants strong dollar. What dollar are you predicting?
Yeah, so this is interesting, and I should say before that, good morning to all of you this fine morning. We have a view of the dollar that sees it actually weakening versus the euro and sterling, somewhat at least, going into the back half of this year. Whether it's what Trump wants or not, I think is not what's relevant here, although what Trump is doing is going to have some say over what the dollar does, and particularly the election in our view, because we think that one of the issues the market has not factored in recently are the risks around the U.S. election. And I'm not speaking so much about the presidential election, but of course, if the Senate goes Democratic, I think that the situation with regard to taxes could change in the U.S. We could see a shift away from U.S. equities if the prevailing winds shift towards higher statutory corporate tax rates or wealth taxes or capital gains taxes. And if that were to happen, we could see the dollar start to weaken against some of the majors as asset allocators around the world simply start to move away from U.S. equities. So that's clearly one thing that could take the dollar a bit lower relative to the euro potentially, and that's certainly something that's tied to U.S. political risk that's out there that I think the market's not taking too much account of right now. I think the risks are mild, however, right? I mean, even if we were to get something like this, there's still some issues prevailing to the downside on the euro. We can see the dollar weakening, but not that much against euro and sterling going into the back half of this year.
Terry, you touched on the $1 trillion question in the FX market. What's the driver? What's the dominant driver? Is it rate differentials or is it policy? Is it fiscal policy? Which one is it at the moment for you, Terry?
Well, I think it's more rate differentials at this point. It's been very difficult for the market to make distinctions between fiscal policy across countries, let's say. When we're talking about trillions of dollars of spending and loan guarantees and other ways in which fiscal authorities are going to try to influence the economy, it's very, very difficult for I think in my mind, for traders, even FX around to say, okay, well, that country's stimulating more and that country's stimulating less. It all turns into a mismatch at some point, especially insofar as we're not getting very much guidance with regard to when all of these policies will be ending. I will say this, however, to the extent that fiscal policy is not just stimulatory, but has other effects as well, it could be important. And I'll bring up here the case of the pandemic emergency relief fund that the EU is thinking about going forward with. As you guys know, about 750 billion euros all told in grants and loans. That's obviously going to be, to some extent, stimulatory. But I think to the extent that it's going to help the euro in the back half of this year, it's not because it's stimulatory, but because it speaks to one of the most important medium-term risks and longer-term risks of growth, which is the existential risk of an ultimate euro breakup. As we see more EU unity because of this fiscal stimulus, it could help the euro. But that's a special case. I think in most instances, fiscal policy, at least the magnitude of it, is not that important. And it will be things like rate differentials that drive these currencies.
All right, Terry, let's talk about rate differentials in an era of yield curve control. John and Tom have been talking about this extensively. We've heard from Fed officials this is clearly something they are considering. If the Federal Reserve does peg the yield curve at a certain place, if it commits to buying enough treasuries to keep it there, what does that mean in terms of currencies? Does it dampen all the volatility? Does it give a lift to the dollar?
I think it's going to dampen volatility. I don't think it's necessarily going to give a lift. And of course, this is all, we all have to consider this in relative terms, right? Is yield curve control better or worse for the dollar than, say, the alternative strategy that the Fed might have pursued, let's say, in an alternative universe, which was to go to, say, negative rates? Let's put it this way. I think if the Fed did go to negative rates, it would be much worse for the dollar than if it were to do yield curve control. The problem with yield curve control is that it's a very, very tricky thing, of course, because if you were to peg, let's say, the 3-year yield or the 5-year yield to a specific level, you would have to issue policy guidance in respect of the short term, or the overnight rate, which is consistent to where you are pegging the 3-year yield or the 5-year yield. If you make a mistake in that regard, you may have the market choose to either buy 3-year paper or 5-year paper aggressively or sell it, in which case the Fed would lose control of its balance sheet. If it were to do that, to lose control of its balance sheet because it pegged the yield in the wrong place, then I think you would have a problem for the dollar. But let's assume for now that the Fed is pretty wise and savvy about this, and that when it pegs the 3-year yield or the 5-year yield, it will do it in a manner that's consistent, or at a level that's consistent with the forward guidance it's issuing, in which case the Fed may not have
Terry
to
Wiseman
control its balance
of Macquarie
sheet
with us on Tom Keen's favourite subject. Terry, this drives Tom Keen totally insane, but I wonder whether it sounds more dramatic than it actually is, because if they do go forward with what Williams and Clara have talked about in the last couple of weeks, all they're basically saying is that yield curve control is the following. It is a complement to forward guidance and date contingent forward guidance, and basically they're just going to turn around and say for the next 2-3 years, say, we'll sit on yields out to 5 years, 3 years, whatever it might be, in line with the forward guidance. And guess what? The market's already there, Terry. The market is in line at the front end into the belly with the Fed funds rate already. So hasn't the market already done this work, Terry? Isn't the Fed just basically saying, here's the cap?
So I agree with Richard Cloud 100% that yield curve control is complementary and it has to be done as a complement to forward guidance. But there's the rub, right? If they were to make a mistake, or maybe the market misinterprets them as issuing a forward guidance which is not consistent with the yield at which they're pegging the 3 or 5-year bond or the 10-year bond, then you have a problem. You have to thread the needle a little bit here, right? You have to make
First Word News, I'm Rishika Gupta. Lawmakers in China have defied a threat by President Trump. They approved a proposal for sweeping national security legislation aimed at Hong Kong. Democracy advocates say the measure will curb essential freedoms in the city. The vote came a day after the US declared that Hong Kong was no longer autonomous, and it could lead President Trump into imposing sanctions on China. The Trump administration reportedly is taking aim at Chinese students in the US. According to the New York Times, it plans to cancel the visas of Chinese graduate students and researchers who have direct ties to universities affiliated with the Chinese army. Chinese students form the largest single foreign student population in the US. And a grim milestone for the US. There have now been more than 100,000 deaths here from the coronavirus. That's the world's highest death toll. It's been almost 3 months since the government announced the first fatality in the US. That happened February 29th in Washington state. More than 1.6 million people in the US have been infected. The number of new cases is trending downwards. And a quarter of the companies using the British government's furlough plan can't afford to take on any of the cost of paying workers. That's according to the Institute of Directors think tank. The plan currently pays 80% of the wages for 8.4 million jobs. The government wants to change it so firms can bring back workers on a part-time basis, but they'd be asked to pay a greater share of those wages. Global News 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Tune in to today's Options Insight, sponsored by Thinkorswim by TD Ameritrade.
Huh. They made this blackberry taste exactly like blackberry hint water.
They made this watermelon taste like hint water, too.
How'd you farmer wizards make all this fruit taste just like hint water?
Well, we triple irrigate our fruit with hint water in the world's largest biosphere, which modifies the DNA to taste exactly like hint water.
Cool. I wonder if their lemons taste just like lemon hint water.
I wonder if their pineapples taste like hint water, too.
Find out for yourself at drinkhint.com. Right now, for a limited time, new customers can get 40% off our top flavors. That's 36 bottles for only $36. Only $1 per bottle. But only if you go right now to drinkhint.com. Order today and we'll ship it direct to your door for free. We'll also include a free gift, a limited edition Hint drawstring backpack. Hint, no sugar, no sweeteners, no calories. It's water with a touch of true fruit flavor. Go to drinkhint.com and order today.
Why would your kids need a Greenlight debit card? Imagine a debit card and app designed to help them develop healthy financial habits, to teach them how to save and encourage them to set their own goals. Now imagine the difference it could make in their lives, in their futures. Greenlight.
HelloFresh is dinner that comes with less and gives you more. Less shopping, more pre-portioned ingredients delivered. Less kitchen chaos, more easy 5-star recipes. Choose dinner that comes with less and get so much more. Use code TV30 for $30 off, including free shipping on your first box.
Soccer camp canceled. Travel plans postponed. Dojo is still closed. Don't put your passions on hold. Pursue them differently. Finally, an online experience you'll actually look forward to. Enroll now at idtech.com/summer.
Calculations and the modeling that we do remains very sensitive to unemployment. It remains very sensitive to GDP, to housing prices. And so as we continue to look at what we think the future trajectories are of those, we'll continue to make appropriate decisions around reserving into the future.
For that, and thank you very much for your patience. Let's talk about the rate story and why some people don't believe in this rotation into the financials. It's because they listen to Federal Reserve officials, and those Fed officials tell them rates aren't going up for a long, long time. Therefore, why do I want to own the banks, Gerard? What do you say back?
I think one of the things we have to look at, John, is I think you pointed out year to date, the stocks are still down 30%. So we're nowhere near the levels we were at the end of 2019. So there's still real value here, even though the rate environment is not as positive for the banks as we'd like to see. I would point out, however, the yield curve has steepened a bit, so that's always positive for the bank's net interest margin. But a low rate environment that we're in today, and like you said, the Fed has indicated it's going to stay this way, that is one of the challenges the banks have. But what we're seeing, John, to offset that is the balance sheets are growing for the banks, which is very different than what we saw in 08-09. This growth in the balance sheets will offset the pressure on the margins due to the fact that more people are borrowing, not just through PPP, but also through the commercial lines of credit that the banks are issuing to their corporate customers.
Well, Gerard, you know better than most, that's a double-edged sword. They're extending their balance sheet in a really tough time, in a weak economy. I just wonder how much risk they're taking on at the moment, Gerard.
That's an interesting question because we certainly are seeing a very weak economy, and generally speaking, I think the consensus call, and certainly our call, is that the economy will recover in the second half of the year. Should that play out, then the credit risks are not as high as they may appear at this time. But if we stay in an extended recession into 21, then I'm with you, John, then there's going to be greater credit losses from these loans that are being put on the books. But right now, we don't see that at this time.
About some of the response that we might see from the Federal Reserve. We've been talking about yield curve control. The bond markets are pricing in negative rates. What would it do to U.S. banks if the Federal Reserve were to take rates below zero?
That would be really bad. We've seen this happen over in Japan and in Europe, and we've seen the pressure on the bank's profitability with negative rates. So negative rates would be one of the worst environments for the American banks. We don't see that happening just yet, though, as you point out, and I agree with you, Lisa, that there is futures calling for negative rates. But one of the enormous differences in this country than other parts of the world is our money market mutual fund industry. It's over $4.5 trillion in deposits here. And if we go negative rates, you're going to break the buck in many cases in that industry. And we know that is not acceptable for the money market mutual funds. And they are critical to the plumbing of the banking system and the financial system in the U.S. So I still don't think the Fed's going to take rates negative because of the money market mutual fund industry's importance to the financial system here in the U.S.
Gerard, I'm just wondering, given the fact that we have seen a rally in equities tied to financials recently, what are they currently pricing in, given the devastation that we saw in the share prices earlier in the year? Are they pricing in a U-shaped recovery, an increase in credit card loan losses? What do you see?
I think it's pricing in a recovery, and it may be a U-shaped recovery, certainly not a V-shaped, even though we are seeing some evidence that the third quarter numbers, if the second quarter results for real GDP are as bad as expected, we could get a steep recovery off of an extremely low number in the second quarter. But the banks are pricing in a recovery, and if you look at the valuations to book value today, most banks are trading or on average 80% of book. And to put that in comparison, in 08-09, the low for that valuation in that crisis was 46%. So certainly the banks are not pricing in anything like an 08-09 debacle, but there is going to be some recovery that they're pricing in right now.
Gerard Cassidy, thank you so much. Greatly appreciated today with RBC Capital Markets. John, you always go to book value as well, but it really goes to, given the challenges forward, and now, second wave and this, that, and the other thing. To me, John, the great challenge is, will we see a further roll-up of the American banking industry? People like Cassidy really think there'll just be fewer banks out there in 5 years.
Yeah, he's not alone. A lot of people think that's the direction of travel, Tom. I also think it's going to be difficult for many of these names for people to capitulate on their view of financials at the moment because of the outlook for rates. And I think that is the dominant issue right now, Tom, of what we've seen in the last couple of days, the reopening rotation. Is that just a position squeeze? Yeah. Or is that sustainable? How durable is that? And I think that's the big question for a lot of people in the equity market.
I totally agree. John, with 4 minutes to go, we must look at this claims report. Let's be clear. It's improving, but at 2.x million, that's not improving, is it, John?
Yeah, improving for who and relative to what? Relative to an artificial forecast that we come up with doing a survey. It's bad. Yeah. It's bad for the people that make up the number. Let's be clear about that. You've got the market conversation. Is it better or worse? Then you've got the economic conversation. Who makes up the data? Who's in pain? And right now, a lot of people in this labour market. That data is 5 minutes away. Initial jobless claims in the United States of America pushing 40 million in just over 2 months. Next up, the median estimate, 2.1 million jobless claims in America. From New York City this morning, good morning. This is Bloomberg.
These folks don't have time to go to the post office. They use Stamps.com. All the services of the post office, only cheaper. Get a 4-week trial plus postage and a digital scale. Go to Stamps.com/TV and never go to the post office again.
Brett Favre, legendary quarterback. Jerry Rice, legendary wide receiver.
You ready for your weekly meeting?
Yeah, we're ready.
Let's do this.
Let's stack the...
from one generation to the next. It's amazing how much you can learn from a cookie. The Girl Scout Cookie Program. Think outside the box.
From New York City for our audience worldwide, this is Bloomberg Surveillance, live on Bloomberg TV and on Bloomberg Radio. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz as we get data in the United States of America, and a big focus, Lisa Abramowitz, on one data point: initial jobless claims.
Yeah, and they are just coming in right now, slightly above the expectation of surveyed economists by Bloomberg. 2.123 million individuals filed for jobless claims over the past week. The number that I'm really watching, and this is something a lot of people are going to be analyzing, and that is continuing claims. They came down significantly from the prior week to 21 million from more than 25 million the previous week. My question, John, does this show that the reopening of the economy is actually leading to a reversal with people getting brought back into the labor force?
The data in isolation is absolutely ugly, but you pick up on the key point for market participants. What's the direction of travel, Lisa? And Tom, it's about that sequential month-on-month improvement that we're about to see in the next several months. June better than May, July better than June, August better than July. You want to see more of that in the months to come, and we're seeing just a little hint of it on the screen this morning.
Yeah. Well, I like the phrase hint, John. I'm looking at the Bloomberg here, folks. This is outstanding, by the way. For those of you on radio, I'm showing it on TV. It's real simple. It's a Bloomberg terminal on an iPhone, and all I can tell you is they got it right. John, futures up 2, Dow futures up 144, and the VIX floating at a 28.25. I would suggest it's an economic report that the market is at least comfortable with. What do you think?
And expected. I would agree with you as well, Tom. Let's bring in our guest this morning. Steve Risciuto of Mizuho will be weighing in on the situation. Steve, your first take, please, on the data in America.
Been rolling through in the last minute or so is exactly correct. What you're seeing is expectations of declines being outpaced, or I should say underreported. So basically the expectations are much weaker than the actual data is coming in. And it's not just the continuing claims drop, it's also in the durable goods report, and more importantly in the shipments of non-defense, non-aircraft capital goods, which were expected to be down 12.2, coming in at down only 5.4%. It's this kind of expectation being ahead of what's actually happening in the economy, which I think will be the next phase as people begin looking towards the recovery phase of this expansion rather than worrying about how bad was the second quarter.
Steve, you're just one of the great dynamic economists of always looking at the movement and the change. Let me ask you a question I've never asked anyone before. If you come out of a pandemic, as we clearly are, what's the rate of change to a better economy? Do things get better suddenly, or is it slow motion?
I think I think it's a little bit of, it's not a V, but it's more like a swoosh. Let me kind of explain it that way. The big drop in the second quarter, if let's say it's 20%, just for argument's sake. Some people think it's 30, some people think it's 40. 20 is just an easy number. Down 20%. How much could Q3 be up? It could be up 10%. That's the scenario we're looking for. We're actually looking for an economy that will be back to zero on a year-over-year growth rate basis by the second quarter of 2021, which means it'll be we'll probably mark the recession as beginning in March, so Q1 and Q2 of 2020 will be the recession, and then the recovery will be Q3 to Q2 of 2021.
Steve, to me, the highlight of this report is the continuing claims. I find this the most interesting aspect of recent jobs reports. Amid this carnage, how many individuals in the United States are actually receiving jobless benefits? Interesting to see that it came down somewhat significantly over the past week. How much is this data adjustments versus, say, a positive sign that people are actually getting rehired as economies reopen?
Well, you have to understand, I mean, we live in the New York metropolitan area, and, what's happening here is not what's happening in many other parts of the country. And in fact, what's happening in many other parts of the country are that these adjustments are taking place, and people are going back. People are going back. You look at the data that we have in terms of credit card activity, in terms of cell phone mobility. We're seeing a dramatic rebound in all that level of activity as people in the unlocked states and in the states that are opening up more quickly than us are getting back to their normal lives.
Right.
And that's what I think you're seeing reflected in that continuing claims number this morning.
Yeah, Jonathan Farrow, I really want to point out that we've seen that yield curve shift with a little bit steeper yield curve and a higher yield in the 30-year bond. Again, that better feeling that you get out of this grim report.
Yeah, let's be clear. This is still a grim report, but it's about the data over the next several months and how it improves, I'm sure, for many market participants. But, Steve, problem I have is that there might be a willingness to extrapolate out that initial quick improvement from going from shutdown to reopening and extrapolating that out into next year. And I know the economic debate at the moment is a two-speed recovery, initially quickly, and then more slowly as the months progress. It becomes a long slog to get the unemployment rate down. Do you sympathize with that view? Does that resonate with you, Steve?
Well, you got to understand, there's two things you're talking about here. You're talking about the pace of economic activity, and you're talking about the labor market developments. In a recovery phase, productivity always exceeds expectations. So therefore, the jobless pull down will be much slower than the economic recovery. That's always a phenomenon that happens. This time it's likely to be a long one as well. So yes, you are going to have that two speeds between what happens in the unemployment and in payroll employment and things of that nature versus what happens in underlying economic activity. You're also going to have a sector shift between which portions of the economy do better coming out of this versus which portions of the economy were leading the employment gains before. And therefore, there is an adjustment process that takes place as people are retooled or people refine themselves and relocate to areas where things happen. So the unemployment environment is going to remain dramatically slower on the improvement side than will the GDP numbers.
Stephen Rasciuto of Mizuho Securities, Chief U.S. Economist. That's exactly where I wanted to go. The skills gap, which we're going to be experiencing and are experiencing, as some jobs get eliminated and others get created coming out of this era. How are we going to bridge that gap? Whose responsibility is it, the companies or the government?
Well, if you look back at long-term history, the answer is it's primarily corporate's requirement to do it, at least in this country. We've abdicated a lot of that because we've gone to very short-term earnings gains environment where everybody's focused on a 10% earnings growth. But the government doesn't do a particularly good job of training people for the alternative sectors either. So I think what we're going to see is an environment where over time the market itself will take care of it. I don't expect us to get much benefit from either government programs or from corporate programs itself. It'll be up to the individual to retool themselves, which is the reason why we've seen it being a slower trajectory in each of the last couple of expansions than the ones we had immediately after the war.
Yeah. Stephen, the glide path on that second look at GDP was a little bit down. I don't want to make too much of it. I know you need time to massage the data. What's the worst GDP will be on an annualized basis? Forget about the drama of 90 days. What's the Rasciuto calculation of how deep this decline is going to be on an annual GDP basis?
Yeah, somewhere between 3 and 3.5%. That's a pretty big downward movement for an annual basis. Yeah, but I think about 3 to 3.5%.
John, I think that's
what's the
just
value
profound.
of annualizing the quarterly figures? Can we talk about that, Tom? I think it's really important. The value of annualizing these quarterly figures, what's the value in that? Over the next quarter, we'll get a terrible number for Q2. People will annualize it. And I just wonder how useful that actually is.
Steve, answer
well, the
annualized
really quarter-over-quarter numbers. I'm sorry, I just want to get in. Tom, were you asking me the annualized quarter-over-quarter number, or you were asking me for the annual for the year? I wanted to make sure I mentioned the right thing.
No, the annual for the year. I mean, the issue here, folks, this is really important. We're going to stop the show right now. This is really, really important. As John correctly brings up, there's 8 ways to slice this. And the media loves to go to the drama of what happens in 90 days. The world's coming to an end. Stephen Rasciuto, is the world coming to an end, or is it better 12 months, -3, -4?
It's better 12 months from now. The world is not coming to the end. And, yeah, as I indicated before, and I'm sorry I interrupted you guys in your conversation earlier, just wanted to make sure I gave the right number. I think the year-over-year numbers will, for 2020, will be down 3 to 3.5%.
Steve Rasciuto, don't ever apologise for interrupting the conversation between Tom and I. Half the audience are happy you did. Steve, fantastic to catch up with you. Tom, as we count people down to the labour market data, around about a week away, next Friday, I think the median estimate so far is something like negative 8 million. But you've been focused on it, Tom. The unemployment rate is going to push towards 20%. And looking at our median estimate in our survey, 19.5 is kind of what people are looking for. 20% unemployment in America. That's the reality of the situation for a lot of people.
And we are colored folks. I really want to make this clear. Lisa, where she lives, where I live, where John lives, we're colored by what we anecdotally see as you do coast to coast and around the world as well. John, I would say it's an intellectual migration out to maybe a 27% unemployment rate. And there's all sorts of shades of gray from 20 out to 27% as people guesstimate this.
But Tom, you've touched on something really important. Our views are coloured by where we're based, and right now we can't get out of our apartments in New York City. And I do wonder whether the estimates, the expectations are distorted by a home bias. And that home bias right now are the high density, high impact cities like New York City. If you live in New York and you are an economist or a market participant, I think it's quite difficult to be optimistic. If you manage to get out of New York and look at what's happening in the rest of the country as we reopen, I think there's a lot more people out there that believe we can normalise quicker.
I looked at the...
And other big banks sent their workers home in March to stem the spread of the coronavirus. British Prime Minister Boris Johnson is asking the UK to move on from the controversy over top aide Dominic Cummings. Johnson has rejected calls from his own party to fire Cummings. The advisor travelled 260 miles to seek childcare support from family at a time when the country was in lockdown. SpaceX will try again Saturday to launch astronauts into orbit. NASA scrubbed yesterday's planned launch when bad weather threatened the Kennedy Space Center. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The kitchen, the basement. Wherever your office is, the global credit market is open. and Open Trading will help you save transaction costs. Stay safe, stay home, stay in the market. Market Access.
It's time for the Memorial Day sale on the Sleep Number 360 smart bed.
Can it help keep me asleep?
Absolutely. It senses your movements and automatically adjusts to keep you both comfortable. It's the final days to save $1,000 on the Sleep Number 360 Special Edition smart bed, now only $17.99, and Sunday.
Out here, each new day is an opportunity to enjoy what's around you, to take pride in your land, to fire up reasons to be together, to collect new memories, and grow in fresh ways. With all that's changed, you've continued to live life out here to the fullest. So in more than 1,800 communities, we're here with everything you need to bring on the new day. Tractor Supply, everything you need for life out here.
Interactive Brokers charges 1.55% for a $100,000 margin loan. Do you know how much your broker charges? Upwards from 6.82% at Fidelity or Schwab, to as high as 7.45 to 7.75% at E-Trade or Ameritrade. Move your account to Interactive Brokers and save at least $5,200, or much more if you're trading big bucks.
At 1-800-PACK-RAT, we make moving and storage simple. We provide the safe, secure moving and storage container. You provide the story. Whether you're moving in town or across the country, need temporary or long-term storage, no one makes it easier than 1-800-PACK-RAT. Get an online quote today for our secure, convenient, and affordable moving and storage solutions. 1-800-PACK-RAT, part of the Moving and Storage Made Simple family.
Hey, did you?
Yep, done.
And the...
Of course.
And...
Oh, yeah.
All in one...
Hour.
Behind the world's most productive people is the world's most comfortable chair, the incredible X-Chair, featuring patented dynamic variable lumbar support. X-Chair's adjustable seat depth keeps users small to tall, comfortable and supported. Available in breathable mesh, HDR foam, or top-grain leather. Customize comfortable positions for your neck and arms. And X-Chair's patented SideFloat Infinite Recline provides the perfect recline for users of almost any size. This is not your grandfather's office chair. X-Chair supports workers everywhere who find themselves now working from home. Call or click to get $100 off the amazing X-Chair featuring dynamic variable lumbar support. Plus, for a limited time, you can also get free same-day shipping. Create the world's most comfortable home office with X-Chair. We're donating 5% of profits to charities fighting COVID-19. Call or click to order today and receive a 30-day risk-free trial and $100 off.
Commodity investing is more than buying gold and oil. From coffee and corn to cattle and natural gas, many sectors drive the commodity markets. And the Bloomberg Commodity Index covers them all. With exposure across 23 traded commodities, Bloomberg is the standard for diversification in commodity markets. With full transparency, measure and monitor your investment performance against the benchmark used by commodity professionals globally. More than gold and oil. The Bloomberg Commodity Index.
If they want to impose the national security law, they are prepared to kill the golden goose to who laid the golden egg. You know, they give up Hong Kong already.
Jimmy Lai, the Next Digital founder, weighing in on the situation in Hong Kong. Tons of pushback to the Chinese Communist Party worldwide over the last couple of days. The market not really responding to it. Equity futures unchanged going into the cash open around about 43 minutes away. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz. Before I step away from Bloomberg Radio and Bloomberg TV to get ready for the next hour on Bloomberg TV, looking ahead to an interview with Erin Brown of PIMCO. Also, Tom catching up with Dan Skelly of Morgan Stanley. Morgan Stanley have really been out front on the following story. The reopening rotation and the recession playbook, they suggest works still in this environment where you pivot as the economy bottoms, you pivot to the more cyclical areas of this market. And over the last couple of days, that's worked in a big way.
John, I got to do a major shout out. Michael Wilson has really been on. He was cautious. He was a pinata why the market went up, and then he got lucky, of course, with the pandemic crash that we saw. And he has absolutely nailed the rotation up story. And of course, people like me, John, I had to go into therapy yesterday over being in the triple leveraged all cash fund. I mean, I'm just devastated. But
Tom, be transparent about what therapy is in the Keene household. You don't get someone on video call and speak to a therapist. It's a bottle and it's got a name on it. Was it Jim? Who was it? Who helped you out?
Made that they could live under the rule of law in relative freedom.
We see this, Lord Patton, on a week where Stanley Ho dies. There are the merchants of Hong Kong going back centuries. How would you suggest the business leaders of Hong Kong will react to this? What would be the best Patton path?
Well, I want to say this very clearly. When I was governor of Hong Kong, there was great support from the American Chamber of Commerce, from the United States in general, for what we were trying to secure in Hong Kong. And even though I had worries about China, as we all did, worries about a communist system, not about Chinese people, but about communism, I used to lobby every year Congress to give China most favored nation status, relatively open trade, although then outside the WTO rules. And I used to also argue that whatever happened, we shouldn't endanger the well-being in Hong Kong. And that's still my feeling. I think that what should happen, I hope, following the Secretary of State's Pompeo's understandable reaction, is that we should form together countries which will make Hong Kong, will make China pay for what it's doing in Hong Kong. I hope that we will stand up for Hong Kong, as over 500 political leaders and church leaders and others around the world have already done. I hope we'll together, and I hope that business will welcome that, because there's no question at all that if you undermine the rule of law in Hong Kong, then you start to make Hong Kong a less important financial hub in Asia. It's already responsible for maybe 2/3 or more of the direct investment which goes into and out of China. And I just think that a lot of people will think about running their businesses from Hong Kong, or about recruiting people to work in Hong Kong. So I hope business will put, without too much nervousness, fairly to China what they actually think.
Lord Patton, your comment from 23 years ago, your historic single sentence, "I have relinquished the administration of this government. God save the Queen, Patton." What is your advice this morning to the Secretary of State of the United States as you call for an allied response, a developed economy response? What would be your counsel to Mr. Pompeo?
My counsel to Mr. Pompeo would be, first of all, to thank him for the interest he's taken in Hong Kong, which I think is widely and enthusiastically accepted in Hong Kong. He's not interfering in Hong Kong. He's expressing the sentiments of a democratic politician about the possible fate of what was a community under the rule of law. So I'd thank him for that. The Chinese don't understand that the problems in Hong Kong are because of them, not because from people from outside. But I would also ask him to remember that liberal democracies around the world, and I mean the word liberal not in a particularly American sense, but in the classical sense, open societies around the world are always strongest when they work together. The world did so well for 50 or 60 years because under American leadership, Europe, Japan, Canada, Australia, United States, all of us worked together under American leadership. And I hope that that's what this administration or a future administration will do, because I've got no thought that China is an enemy to us now. I'm sorry to say that, but that's how it behaves. Not Chinese people, but the Chinese Communist Party.
An extraordinary conversation on this day with Lord Patten of the United Kingdom, and of course on his Hong Kong. He was 28th governor of Hong Kong. We're going to drive forward the conversation, particularly on banking. Our Eric Schatzker in conversation with Michael Corbat. Look for that in the 10 o'clock hour. For Lisa Abramowitz and Jonathan Farrow, I'm Tom Keene. We thank you for listening to the simulcast. Really something unique on radio and on Bloomberg Television. The markets lift off of better claims data than the grim that was expected. This is Bloomberg.
Bloomberg Television, brought to you by Principal Financial Group, committed to helping global investors manage volatile markets with specialized portfolio solutions. Get to know us at Principal.com.
To everyone navigating these uncertain times, whether you're caring for your family at home or those at work, Principal is by your side. We're working hard to answer your questions, like helping you understand what the recently passed economic package can mean.
From New York City for our audience worldwide, good morning. Good morning. The countdown to the open starts right now, 30 minutes away from the opening bell in New York City. I'm Jonathan Ferro, getting you set up for the Thursday morning price action. Equity futures doing okay. We're up 8 points on the S&P 500, up around about 0.25%. The tension between China and the United States doing little to reshape this market. In the bond market, 10-year treasuries come up 2 basis points on a 10-year to 0.7%. And in foreign exchange, the shape of things as follows for the dollar. As the session grows older, the dollar grows a little bit weaker. Euro dollar up by around about 0.1%. That's your price action. Here's the big issue this Thursday morning. A little more than 40 million initial jobless claims in the United States of America in a little more than 2 months. With a couple of questions for all of us. For the people who make up that ugly statistic, can they hope for a better future? For all of us, are we confident we've seen off the worst of it?
Maybe we're near the bottom in terms of the economic downturn, and hopefully we'll start seeing improvement in coming months. I expect to see a pretty significant rebound in the second half of this year.
That was John Williams of the New York Fed. This is what the St. Louis Fed President Jim Bullard had to say. Growth right now is probably the worst it's ever been. The third quarter, very likely right behind the worst quarter, will be the best quarter of all time on the growth perspective. To weigh in on that, Kaylee Lyons looking at the price action in the market. And Kaylee, let's be clear about this. Hoping for a better future. That seems to be what the rotation of the last couple of days is all about.
Yeah, it's absolutely true, John. And you're seeing this narrative of things are looking better playing out in the fact that futures are higher. You're seeing yields move higher as well off the back of that initial jobless claims data. Another 2.12 million filing for unemployment last week. Now, that is down about 300,000 from the week prior, but it is still an incredibly large number. As you mentioned, brings the total claims filed over the last 10 weeks to over 40 million. But even if these numbers aren't good, at the very least, they are getting less bad as localities begin to reopen. And John, the big highlight for me this morning is the continuing claims, far better than economists had feared, just 21 million. Again, objectively, that is a horrific number, but the average estimate was for more than 25 million. This is actually the first time continuous claims have dropped during this pandemic. It's a narrative of these marginal improvements as we look to climb out of the depths of this downturn. And that less bad data is evident in other places you look. John, our team over at Bloomberg Economics has been following all of these activity indicators and has found that since late March, early April, things have improved in most of the economies they follow. In the U.S., it's not just the employment numbers. We also saw better durable good numbers this morning. Even things like mortgage applications are starting to improve. We have to note we are still far from pre-virus levels. There is a long way to go in this recovery, but clearly the market is anticipating it's going to happen. Basically, investors seem to be calling 2020 a wash. We continue to see the growth estimates for this year revised lower, but the estimates for 2021 are getting re-rated higher. And as those forecasts have started shifting higher, we have seen this recovery taking shape in global equities, John.
Kelly Lyons, thank you very much. As we count you down to that opening bell, 27 minutes away, we do have a lift. Equity futures up 12 points on the S&P 500. We advanced 0.4%. A huge story. For a lot of people on the outside looking into what is happening in financial markets, is there a division between Main Street and Wall Street? This is what Nouriel Roubini had to say.
Well, there's certainly divergence between Wall Street and Main Street. I think that Wall Street is pricing in a V-shaped recovery of the economy. But if you look at the market expectation in terms of earnings per share of the S&P 500, they are unrealistic. They're essentially believing that by the end of this year, we're going to go back to the same level of earnings we had at the beginning of the year.
Nouriel Roubini there weighing in on the situation between Main Street and Wall Street. To continue this conversation, I want to bring in Erin Brown of PIMCO. Erin, let's talk about that. How divorced the rally has been from the economic fundamentals. Not is all that simple, but can you weigh in on that situation, please?
Yeah, I think it's a great question. I think there's always a natural divide between what Main Street's pricing in and what Wall Street's pricing in. But I think that's really rooted in the fact that the S&P 500, when you're looking at sort of the largest indicator for the market is, sort of fundamentally different in terms of the composition versus what the economy is. And so the S&P 500 really represents sort of the high quality, companies with access to capital and that also, are highly rated. And 26% of the S&P 500 is the tech sector. That is not representative of what the overall economy is. So when you're buying the S&P 500, you're not buying the small, vulnerable companies that don't have access to liquidity. You're buying the large cap companies with access to liquidity, which is why I think there is this fundamental divide between what the S&P 500 or the market is pricing in and what the overall economy is likely to bring.
That certainly goes a long way to explaining what we've seen over the last several months and through much of this year. Erin, what we've seen over the last couple of days has been a vicious rotation beneath the surface, away from growth and towards value, to the more cyclical areas of this market, the banks, the travel companies. My question is whether that's a position squeeze that we're starting to see emerge, something more tactical or something much more fundamental and sustainable. Erin, which side of that argument would you lean on?
I think it's definitely a position squeeze. When we entered the end of April into early May, what we saw was the valuation spread between value and growth was the widest it had been in over 15 years. And also when you looked at position sentiment surveys, they also suggested that people were very overweight growth and underweight value. So we came into the month of May with a very wide dispersion between how people were pricing growth equities and value equities. And you're starting to see some of that position unwind right now. We, sort of fundamentally at PIMCO think that you should really focus on quality in your portfolio, sustainability of earnings and cash flow. And that, I don't think that value overall offers long-term sort of fundamental outperformance optionality. I do think that certainly as we start to see the economies reopen, as we start to see mobility data turn and the economic data turn, it's likely to see this valuation sort of gap start to narrow slightly, and you are starting to see it play out with value outperformance. But, longer term, I really think it's important to focus on sort of the fundamentals where you think there's real sustainability of cash flows. That does really tend to favor growth equities. The way that we're positioning in our portfolios right now is we're taking a barbell approach to the portfolio overall, where we're buying sort of high-quality cyclicals, high-quality sort of value plays in the consumer staples, consumer discretionary area like home builders, also industrial sector, but then also continuing to focus on where we see sustainability of cash flows, and that's in the healthcare and in the tech sector as well.
Erin, give me a bit more detail there. How balanced is that barbell? Is it heavily weighted towards the safer part of the portfolio or more weighted towards the cyclical areas as we reopen these economies?
I think as you reopen the economies, you want to lean a little bit more cyclical. The first stage of the sort of bounce off the lows from March 23rd was driven by really extraordinary monetary and fiscal policy. And so you saw a pretty significant weighting into and rally in the yield-oriented defensive sectors. Now, as you start to see the economies reopen, growth is really driving this, and you're starting to see value outperform. Economic growth is driving this performance, and you're starting to see value outperform. I think that there's legs for this to run a couple of more weeks, but sort of fundamentally, as we look out the next year, we want to continue to be in the safer parts of the market and really in where we see sort of sustainability of growth and high return on equity and return on assets.
Erin, nothing like higher prices to get more people to participate in the equity market. I know it's counterintuitive for other markets, but for financial markets, that just seems to be how it works. There will be some people thinking in credit right now that now is the time to position to the lower quality segments of the market. Now, I want to be clear about this. You're saying take on more cyclicality, but is that high quality cyclical exposure, or are you going down a quality curve as well at the same time?
No, so we don't think that it makes sense at this point to go down the quality curve. Remember, we're still in an environment where S&P earnings are going to drop, more than they ever have in history. They're likely to decline, well north of 20% this year. This is going to put enormous stress on, sort of highly leveraged, vulnerable companies. And so we do expect to see default rates pick up, and that is going to hurt the lower segments of the, credit quality curve. So as a result of that, we don't think that going down in quality makes sense because we still think that there are defaults to come. And so, I think staying up in quality, really focusing on which companies within the equity market have access to capital, have been able to successfully tap the equity or the credit markets, and that are going to continue to be able to do so. I think that's really what you want to focus on, not going down in quality at this point when we still have defaults yet to come.
And some really messy data to get through as well. Erin Brown of PIMCO. Erin, always great to catch up with you. I hope the team is doing well. As we count you down to the opening bell, around about 20 minutes away, equity futures positive, 11 points, up 0.4% on the S&P 500, shaking off all of the concerns, all of the problems, all the tension in Hong Kong, with the situation between China and the United States continuing to escalate. We'll head down to Washington, D.C. next to catch up with Kevin Cirilli, and we'll hear from Terry Haynes of Pangaea. From New York City this morning, good morning. This is Bloomberg TV.
Xi Jinping is a new sort of Chinese dictator. What we've seen with Xi Jinping is a determination to strengthen the party's hold over everything. He's been throwing China's weight around in a way which is a danger to all democracies around the world, and I think he needs to be called out.
Chris Pannon, the former governor of Hong Kong, the last governor of Hong Kong, weighing in on the situation in Hong Kong and the situation between China and the United States. That tension continues to build. I would say pay attention. Just because it's not playing out in broader markets does not mean it does not matter. Look what's happening to the Hang Seng, look what's happening to the Chinese currency, and look what's happening right here in Washington, D.C. So much has happened in the last 24 hours, but not much has changed yet. We're still waiting to see what the policy initiative will be coming out of this administration. This is what Secretary Pompeo had to say. I reported to Congress that Hong Kong is no longer autonomous from China. Given facts on the ground, the United States stands with the people of Hong Kong. Kevin Cirilli, great to have you with us on this program. They are strong words, but they need to be followed up with something. What's the something?
Well, I'm told by Democrats in the House of Representatives that over the next few weeks there's going to be companion legislation voted on in the House that the Senate took up even before the escalating tensions with Hong Kong just within the last week. So lawmakers on both sides of the aisle are very much united on this particular issue. You mentioned that statement from Secretary Pompeo. I would just add to it what he had to say. He wrote, quote, "Hong Kong does not continue to warrant treatment under United States laws in the same manner as U.S. laws were applied to Hong Kong before July 1997. No reasonable person can assert today that Hong Kong maintains a high degree of autonomy from China, given the facts on the ground. Now, China has been pushing back forcefully. They released a statement of their own, a spokesperson for the Ministry of Foreign Affairs dealing with Hong Kong, saying, by openly interfering in Hong Kong affairs, which are purely China's internal affairs, and trampling international law and basic norms governing international relations, the U.S. laid bare their double standards and gangster logic. That's coming from China. Now, I can tell you that I spoke with Morgan Ortigas, the spokesperson for the State Department, yesterday afternoon, and she said that this is, again, one area where, quite frankly, it's not just the Trump administration policy, it's American policy.
Well, Kevin, that's the issue for me as well. This is not about interfering with a foreign government. This is about a domestic issue in the United States, about how they treat another jurisdiction. What are the policies they apply to that? And if the Chinese Communist Party is not going to offer Hong Kong autonomy, why would the United States continue to offer Hong Kong special trading status? Those two things are hard to reconcile.
They're incredibly hard to reconcile. And in fact, yesterday when I spoke with Morgan, I asked her about bringing on board the broader international community, getting European allies, Jonathan, in line with where the U.S. is coming from. And in fact, some of the reaction from counterparts around the world has been quite praiseworthy. And so that is continuing to suggest from the U.S. perspective that allies are behind this move. When you take it in a broader, you can't look at this issue just in a vacuum. When you look a broader step back and you look at what's happening with the legislation for lawmakers trying to get Chinese companies that are traded on U.S. exchanges under U.S. transparency requirements like other countries, when you look at the criticism that both the Biden campaign and the Trump re-election campaign have lodged at Beijing. Again, it's part of this broader issue now of how the United States is looking to reset the way it does business, not just with Hong Kong, but with Beijing.
Kevin Cirilli, always great to get your thoughts. Thanks for joining us. This is how Terry Haynes of Pangaea responded to the latest escalation and the words of Secretary Pompeo. He wrote the following: because it does not compel the President or Congress to sanction or take other actions against China over Hong Kong, the action is a chess move that provides China with the opportunity to lessen tensions by clarifying or modifying its Hong Kong intentions. Terry Haynes of Pangaea joins us now. Terry, let's discuss this further. Any policy move from the United States cannot just be retaliation for the sake of retaliation. There needs to be an objective. What's the objective of the next policy move, of the next chess move, as you put it?
The objective of the next chess move will be to one of two things, John. Either to try to compel China and criticize China for its lack of transparency and its lack of granting human rights in Hong Kong, and its lack of guaranteeing continued autonomy under the one country, two systems model, or it could hold off further sanctions, understanding that China is taking some moves to actually mitigate what they've initially been talking about. So far, that hasn't happened. The legislative session in China, after I wrote yesterday, the legislative session in China ended with absolutely no change. The premier gave a press conference indicating absolutely no change. But there likely are quite a lot of back channels going on right now about what the next steps are. And the next steps will include whatever happens in Hong Kong itself, and if the Hong Kong government takes any steps to try to impose this. So we've got a lot of chess moves left to go here, but it's a very serious situation, and I don't mean to suggest that it's anything but.
I wouldn't suggest you're doing anything but either, Terry. Let's talk about the next steps going forward towards the November election. Have you got your hands around what the strategy is, what the campaign message is from this administration as we head towards November on this very issue?
Well, the Trump administration, or excuse me, the Trump campaign went out first a month or more ago with a tough on China campaign that they've continued, and they've continued not only praising the president's toughness on China, but also criticizing bluntly Biden's alleged lack of toughness, and bringing up the whole Hunter Biden Burisma thing as part of it. And so I imagine that will be a differentiator for some time to come. That is something that swing states, heartland states, react strongly, positively to, and I think will continue. But the president needs not just rhetoric. The president needs results as well. This is one reason I continue to suggest that both the United States and China have for the past few years and will continue to ring-fence trade issues and continue trade developments, including the Phase 1 deal, and continue to implement them even though there are tensions in other areas. I mean, not just in Hong Kong on defense matters and a bunch of other things. So I think what you're looking at is increased tensions, increased uncertainty for market purposes, but at the same time, no indication that that trade stops moving forward. And Trump.
Terry, I struggle to believe that they can isolate the trade issues away from everything else. Quite clearly, we've seen a big shift. And trade and trading with China and the Chinese Communist Party was largely seen as a tool to influence and change the behavior of the Chinese Communist Party. I don't think we have an administration anymore that actually believes that's possible. So what I'm trying to understand is what is the broader strategy for the United States on the international scene? And I'll go back to this question. Do they continue to think about looking inward, or do they look outward and try and get the Europeans and other countries in Asia as well to come with them to build out a sphere of influence on the global stage that maybe does not include the Chinese Communist Party?
Well, two things. One is I think this administration has always been of the view that United States policy needs to change in China, and I think they've been quite transparent about that from the beginning. So you have that, number one. Number two, I think they're very interested in having allies around them, and I thought that was a very important part of what Kevin had to say. The allies, I think, will take a little bit of time to bring around, but I think they're positively inclined to begin with. Britain certainly, European Union a little bit less so, who has always seen itself as squeezed between the United States and China on this. But the human rights implications of the current Chinese moves in Hong Kong, I think, make it more certain that that Europe plays some role here. So what you are likely to see is a Western coalition move in some way, most likely in sanctions to begin with, very targeted sanctions against the Chinese government specifically.
Terry Haynes of Pangaea on the next moves in Washington, D.C. Terry, looking forward to catching up with you soon. Send my best to the family, won't you? Always fantastic to catch up with you, sir. 8 minutes away from the opening bell in New York City, we advanced by 9 points on the S&P 500. We are up by 1/3 of 1%. There has been very little price action off the back of a really important story in Hong Kong. That does not diminish the importance of that story. It's just an observation that we're not seeing much market fallout. Coming up on the programme, Dan Skelly of Morgan Stanley, and a hat tip to Morgan Stanley, who have said the reopening rotation into cyclicals will happen. They believe it's durable. I believe a lot of you still question just how sustainable that rotation in the last couple of days will actually be. That conversation is coming up shortly, and next we'll get you some of the analyst action from Wall Street and the Wall Street community. From New York City this morning, good morning to you all. This is The Open. cloudy New York City, 5 minutes out from the cash open. Equities advance 8 points, up a third of 1%. We may well add some weight to the gains we've seen over the last couple of days. Some muted gains maybe at the opening bell. The opening bell just a couple of minutes away. Let's take the opportunity to get you some morning calls. Some of the moves from the analyst community on Wall Street this morning. Your first call, first up from Credit Suisse, downgrading Boston Beer to neutral with a $505 price target. The analyst saying the stock's valuation now properly reflects the Brewers' growth outlook. Your second call this morning. Next up from KeyBank, upgrading Qualcomm to overweight with a 105 price target, $105 per share. That's the target. The analyst expecting the company and its chips for high-end smartphones to benefit from the ban on Huawei. And your third and final call this morning, it comes from JP Morgan. They're downgrading HP to neutral with a $20 price target. The analyst seeing no near-term catalyst following the company's, quote, lackluster earnings and guidance. Three of the calls from the street. Just ahead of the opening bell from New York City, we are 4 minutes away with equity futures elevated 9 points, up a third of 1%, off the back of some really ugly jobless claims data once again. As we look forward to next week, I use that term loosely, to another ugly jobs report as well. How quickly can we make some improvements? That is going to be the story in the next several months as we reopen this economy. From New York, this is Bloomberg. 25 seconds away from the opening bell in New York City. Here's the situation in the market. Equity futures are higher by 8 points on the S&P 500. We advance after 2 days of gains. We're up 1/3% going into the opening bell. Outside of that, in the bond market, Treasury yields relatively unchanged coming off the back of this claims data. Just a little bit of a lift on a 10-year yield. Just a little bit of steepness comes through as continuing claims pull back a bit. The numbers are still ugly, but it's going to be the direction of travel that shapes this market for the months ahead. Your 10-year yield up 2 basis points to 0.7%. In foreign exchange, your story in FX is a weaker dollar. As this session grows older, that weakness comes through just a little bit more. Euro dollar up by 1/3%. A stronger euro, a stronger Aussie, a stronger pound in the mix as well. So that's your cross-asset price action. Let's get to the market desk and get some movers. Here is Katie Lines.
Well, John, I want to kick it off with Boeing. It's opened higher by about 4%, and it really just is continuing its rally from recent days. It's up by about 1/4 in just since the past Monday. Now, of course, this rallied this morning is a continuation on news yesterday that it's restarting production of the 737 MAX. You also have Toll Brothers up the better part of 5%. It beat estimates on the top and bottom line in the second quarter. Plus, they've seen an uptick in new home deposits in recent weeks. They're up about 13% year on year in May, pointing to a stabilization of the housing market. You have good news for Dollar Tree also. That stock is higher by some 10%. Comp sales were up 7% in the first quarter, even with a drop in Easter holiday sales. And finally, to the downside, though, we have HP lower by nearly 9%. Revenue fell 11% in the company's fiscal second quarter. The big issue was about the supply chain. That offset the small boon the company got from people working at home. And the movers today really are indicative of a broader theme, John. I want to talk about the sector rotation we've seen take shape in recent days out of the high-flying technology stocks into the beaten-down cyclical areas of the market. Over the past week, it is the growth-sensitive sectors like banks that have outperformed. That index up by 14%, home builders up by 10%, and take a look at department stores up by more than 1/4 over just the past 5 sessions. All the while FANG stocks have fallen into the red. And what this has resulted in, John, is a really sharp rotation into value. If you look at the Russell 3000 Value Index, it is set for its best week of outperformance relative to its growth counterpart in 11 years, since all the way back in 2009. Investors really playing catch up, rushing into the cheaper, riskier areas of this market, clearly betting on a recovery as we start reopening the U.S. economy, John.
Kelly Lines, thank you very much. That is the debate of the moment in this equity market worldwide, that reopening rotation. Two sides to every argument, of course. This is what Stuart Kaiser of UBS had to say, and this is what Mike Wilson of Morgan Stanley had to say back as well. Take a listen.
Well, I think we have a lot of options in terms of our toolkit. Whether we've used obviously forward guidance of different types in the past. We've clearly used asset purchases to affect financial conditions in the past, and the yield curve control, which has now been used in a few other countries, is I think a tool that could potentially complement forward guidance and or other policy actions.
That was not the correct sound. That was Mr. Williams of the New York Fed. We'll catch up a little bit more on that particular topic a little bit later this morning. Dan Skelly of Morgan Stanley joins us now. Dan, I can basically tell our listeners, our viewers, what happened with that Stuart Kaiser, Mike Wilson conversation. Mike Wilson, your colleague, of course, are looking for that reopening rotation. And I have to tip my hat to you, Dan, because it's been working out over the last couple of days. The question I think a lot of people have is whether that is a positioning squeeze or a sustainable rotation. Dan, can you give us colour on why you think it's the latter and not the former?
Sure, and good morning, Jonathan. Thanks so much for having me on today. We do see some more broadening out in terms of the market leadership. And frankly, this is a trend we've been seeing since the bottom on March 23rd. I think it all depends on your time horizon and how you measure things. Tech and FANG has certainly done well from the peak to today, but really there's been a change since the lows. Since the lows on March 23rd, you've seen value names, small cap names, and now finally, to your point earlier, banks in the last week or so are finally starting to catch up as well. So one thing I would just highlight, Jonathan, is that this is a familiar pattern coming out of recessions. And if we see, if we're convinced that we're on now the other side of this recovery as the economy reopens, we do think there's more room to go. And let me help support that. In 2010 and 2011, we saw obviously a strong recovery coming out of the 2008 crisis. And we track a cyclicals versus defensives basket on our Morgan Stanley trading desk. That basket, that relative move, was 66% of cyclical outperformance over defensives over a 5-month time horizon. What we've seen since the market low on March 23rd is a 39% move in that relative basket. So, Jonathan, that would suggest we're a little bit more than halfway through that outperformance of cyclicals if those same patterns stay hold.
Looking forward from here, on the financials specifically, I've heard so many questions in the last couple of days, Dan, on why the financials and the rotation into the banks can continue, especially when we have this big headwind and it's central banks worldwide not lifting rates for a long time. Dan, what gives you encouragement that that part of the rotation can continue when we're not going to get the support from rates anytime soon?
So this is really a key question, and it is the overhang in terms of that financial performance. And frankly, it's one of the key overhangs for the market as a whole, because when you think about the contribution and the weighting of tech and FANG, it's such a large weighting in the overall S&P that you really need another big chunk of that index to lead to push the overall markets higher. And we think that overall offset could be banks longer term. But back to your question, rates are probably not going anywhere for the time being. And then you've also got the added issue of dividends. And when you think about it, a lot of people have gone into banks for their attractive yields last year, the last 10 years, as a result of the recapitalization of the balance sheets and the attractive capital returns. That's also an overhang near term, Jonathan, as we go through CCAR over the next 6 to 8 weeks. And so I think this is essentially a true value trade. It probably doesn't go anywhere, to your point, in the near term. But when you look at longer term trends, we actually think we would highlight the banks are in much better shape than they were back in 2008, obviously. We think that the dividends probably do get kept. And so coming out of CCAR, that could actually be a positive catalyst.
Yeah, Dan, I don't want to get too cute about it. I just want to echo what I think a lot of people will be thinking as we talk about this. They'll be seeing this in a couple of stages. They'll see the risk skewed asymmetrically to the beaten cyclicals as we reopen, quite clearly. That's where the risk is right now, to the cyclicals getting a lift, the positioning squeeze, etc. And then as we look further out, I think that's where the debate is right now between you and a lot of people. So let me play the other side just a little bit. As we look further out, higher debt loads, lower growth, lower rates. Isn't that an environment that the growth names that led the equity market for much of the last several years, isn't that an environment where they continue to dominate? How does that discussion evolve when you speak to clients at the moment, Dan?
Yeah, we're certainly not telling folks to abandon that cohort of stocks completely, Jonathan. So that's a key nuance, is that we don't really see it as an either or. We've obviously been favoring the cyclical cohort since the last 4 to 6 weeks. And as you noted kindly before, we had good timing doing that. However, I think it's safe to say that a lot of these tech platforms still have really powerful earning streams. There are going to be structural changes to the way we operate, both from a living and working perspective post the pandemic. And so their earning streams are likely going to continue to be fairly aggressive and may actually improve in some cases. So it's not a question of abandoning them completely. One last thing I'll say to add on to that, from the model portfolio perspective that my team runs, we've been trying to find actually a combination of both. So we're looking at stocks that have trends that were in place, structural trends that were positive before COVID, that have frankly been on hold because of the cyclical downturn, but now have positive cyclical leverage. So trends like off-price retailing, we added TJX to the portfolio recently. We've heard a really good fundamental update from TJX in terms of the demand for their goods, the pent-up demand in some of the stores they've recently reopened. So that's one area that, in our view, has a little bit of a hybrid combination of positive secular trends benefiting from share gains from department store failures, which, by the way, are getting even worse, as well as cyclical leverage to the economy reopening. One other sector we view in the same kind of theme is medical devices. As we all know, a lot of procedure surgeries have been put off because of the pandemic. We see that as another area that will benefit as the economy reopens. And like I said, this is another theme that had positive structural trends even before COVID. So names like Stryker in the orthopedic space, we see that as a positive idea as well.
Dan, great work. over the last several weeks. This is what you've been calling for quite a while, and it's really working out in a big way. The debate will continue on how sustainable this is, and I look forward to continue the conversation with you, Dan. Send my best to the rest of the team, won't you? Fantastic work over the last several weeks. Looking at this market right now, 9 minutes into the session, equities doing okay in the United States. On the S&P 500, a little bit of a lift that fades. We are dead flat, but it's the gains over the last couple of days that I think has just got a ton of attention. Let's strip this one back just a little bit more and bring in Taylor Riggs, shall we? Good morning to you, Taylor.
Good morning, John. I'm taking a look at some of the tech markets this morning. Looks like they could be facing a pretty tough day. This is after the president is set to sign an executive order potentially as soon as today that would make it easier for regulators to hold social media companies liable for curbing user speech. It would also narrow the liability protections that these companies have for third-party posts. Remember, this all started after Twitter put a fact-checking link on a pair of the president's tweets, so it would really affect Twitter, or maybe Facebook the most. I want to flip up the board and take a look at exactly what this executive order might do. It could claim selective censoring. It may make the platform liable for posted messages. It would establish a citizens complaint tool, and it would roll back a lot of the protections that these companies have had since 1996. Now, the two big companies that we're really looking at, of course, Twitter and Facebook. On a year-to-date performance, Facebook mildly outperforming. But remember that the two CEOs have taken big different stances. Mark Zuckerberg said that he did not believe that social media companies should serve as online police. This came up during political ads as all of these social media companies to see if they were more equipped to handle fake news in the 2016 election. He came under criticism for that stance, saying regulators telling him it's like building a highway but not enforcing a lot of the speed limits. So after that, Twitter then took a more middle ground stance. Remember, they're flagging tweets. They're adding some of these fact-checking buttons. They are not taking political ads of any kind, but it does seem like these two companies are still under fire from the president. We'll have to see how that executive order, if it does go through, how that goes today. John.
Taylor Riggs, thank you very much. One area that I know some people are paying attention to in this market right now, 11, 12 minutes into the session, equities going absolutely nowhere, totally unchanged on the S&P 500. Next up on this programme, we'll bring you some of that interview from the New York Fed President John Williams, getting his views on the next steps from the Federal Reserve on yield curve control. And we've got to reflect on the state of this labour market in America and worldwide. We'll do that next with Michael McKee and Jim Keenan of BlackRock. That conversation's next. This is Bloomberg. From New York, around about 14 minutes into the session, your equity price action shaping up as follows. We have a lift off the lows. Session's still young. We're only 14 minutes in, but we're positive, up 0.25% on the S&P, up around about 0.2%. A similar move on the Nasdaq as well. The Federal Reserve has done so much over the last several months. For the next several months, there will be a focus on forward guidance and maybe even deploying more tools, including yield curve control. Take a listen to what the New York Fed President John Williams had to say to us on that very subject.
Well, I think we have a lot of options in terms of our toolkit. Whether, we've used obviously forward guidance of different types in the past. We've clearly used, asset purchases to affect financial conditions in the past. And the yield curve control, which has now been used in a few other countries, is I think, a tool that could complement, potentially complement forward guidance and or other policy actions.
That was John Williams of the New York Fed. We seem to be having some problems with that sound. Forgive me for that. I want to continue this conversation with Mike McKee, who helped me conduct that interview in the last 24 hours. Mike, what have we learned from the Fed speak over the last several weeks about the next steps on forward guidance?
Well, they've always held out forward guidance as the first thing that they want to do, and they'd probably make it a calendar sense. We will keep it, the interest rates unchanged until such and such a date. They have experimented with state contingent until we reach a certain level of employment or something like that. But the question that is being raised in financial markets now, and I've seen a couple people referencing it today, is does it really matter at a time when the markets expect interest rates to be low for a very long time? In other words, we may already have forward guidance in place and it won't have much of an effect. So they'll have to look at some other tool if they start to see interest rates rise.
Mike, the other issue for us is this labour market. The data, once again, relative to expectations, that's a separate story. The data in absolute terms in isolation is terrible. And the question that you and I keep coming back to, sequentially over the next several months, we will get some improvement. It's just about how quickly this labour market can recover. And when we spoke to John Williams yesterday and we talked about objectives, he did mention the objective was to get back to a pre-COVID-19 economy. And Mike, I do wonder how long that's going to take.
It's going to take years until we get back to that, John, because one of the things that you see in today's numbers, the decline in continuing claims may be a statistical anomaly, and there are a number of reasons for that. It probably isn't true, but we're still seeing an enormous number of initial claims, and we're 10 weeks in. And what that suggests is that there may be companies that are now giving up. They're going out of business. They held out for a while, kept people on the payrolls, but now they're closing down because they don't think they can come back from that. And if that's the case, then we're going to be in worse shape coming out of this than we are right now. And it's going to take even longer to rebuild those businesses and to re-employ those people.
Mike McKee on the latest. Mike, great to have you with us, of course, right here on Bloomberg TV. We can continue that conversation with Jim Keenan of BlackRock. Jim, fantastic to catch up with you, sir. Let's start on the yield curve control debate, shall we? Is this something that you're paying attention to? And does it really change much given where the market is priced already, pretty much in line with the Fed funds rate going out through 5 years?
Thanks, John. I think, obviously the yield curve control or forward guidance or QE are all measures in which the Fed can try to control the long end of the curve, which I think will be helpful and stimulative. But if you just take a step back here, if you just listen to the Fed over the course of the last several weeks, really what they're saying is there's a lot of tools in the toolkit here, right? There's an enormous amount of damage that is done, not just from the pandemic, but the response to shut down the economy to avoid a healthcare crisis. And, when you think about that, you've obviously seen unemployment rise dramatically. And from a Fed's perspective, this is going to take a long time to kind of get back to normal, like 2019 levels. And, they will continue to use all measures by which they can to try to stabilize the market and stabilize unemployment.
Jim, as we reopen, there's just a huge debate going on every single day on programs like this and conversations you have with clients, I'm sure, about how much cyclicality, how much more risk you should add to the portfolio as this economy reopens, as more parts of this economy reopens, and slowly, maybe even quickly, we get back to normal again. Jim, how do you manage that exposure in the months to come?
Yeah, it's a good point. I think there's obviously, a long time to get back to the 2019 level. But when you think about, the last couple months, we are going from an economic shutdown to a reopening. And I think what you'll find here is the data, there's going to be a cyclical nature off of the lows of that data that we saw in April and early May here. And as the economy starts to reopen, we would expect to see acceleration of demand here because you still have consumption trends, you still have pent-up demand over the last couple of months. I would say, the high end or the high net income brackets are not really going to be affected here, and you'll still see consumption there. There's a significant amount of stimulus coming in, from both the monetary support and the fiscal support. So I think in the short term, you'll probably see another 4 to 6 weeks of data that is going to look very positive off the lows. But then as you start to get into Q3 and Q4 and into next year, I think, this will still have a more normalized recession relative to 2019, and it will take some time. And I guess Mike said there are businesses, there are municipalities that are not going to make it through here, and obviously that is going to cause some length here with regards to trying to get back here. So we are. I would say we're pretty positive from a risk perspective right now. We do like the credit markets here, obviously because of that dynamic of an economic recovery here combined with monetary and fiscal support here. From a credit standpoint, the high yield and broad and the leveraged loan markets are pricing in 35 to 40% implied default rates over the next 5 years. And we think that's true draconian based off of where we see the recoveries coming in. So we do like risk here, and obviously we like the credit markets in the short term.
Jim, clearly people are still nervous, and I think there's two separate camps right now. And I reflected on the pictures from the long weekend of people on the beaches, packed out on the beaches. And I think there were just two different reactions to that, just in general, and allow me to generalize the situation. For some people, it fueled hopes that we can recover quickly. For other people, it triggered fears that we could get a second wave. And I just think from a market perspective, got to try and work out, are the risks that symmetrical? Is it that binary? Or are you seeing a little bit of asymmetry here? How would you phrase things, Jim? How would you characterize the situation just in terms of the balance of risks?
Yeah, it's a good point. I don't think it is that binary. I think, there is risk of obviously a second wave as the economy opens back up. We just talked about it in the next 4 to 6 weeks. I do think you will see the positive data coming off the lows. But depending on how that wave looks or the progression, and I would say the most important thing is to continue to watch the data around the virus, the spread curve into the next several months after the reopening. But even things around, there's a lot more information around testing and treatments and even the potential of a vaccine here that is important to watch, too, as you think about risk going into the end of the year. I don't necessarily think it's binary. I say there are different experiences. It's obviously a global pandemic, but there are different experiences with regards to the magnitude of the risk in different areas. And I think you'll see different behavioral changes. You'll obviously see different policies by which to try to mitigate some of that risk. And the economy in the country will evolve as we start to reopen back up again here. But I think there's a certainly risk. I don't necessarily think it's binary. I don't think we're going to go back into a situation where you're going to see an economic shutdown again, because there's a lot of information that we've learned over the last 6 months.
Jim, really thoughtful stuff. Appreciate your time, as always. My best to you and yours at a difficult time for many over the last several months. Jim Keenan there of BlackRock. 23 minutes into this session, the equity market advances. The cyclical tilt you saw over the previous 2 days, not carrying through this Thursday morning. More to come. Your trading diary too. That's next. This is Bloomberg. 25 minutes into the session, equity markets just slightly positive, up a couple of tenths of 1% on the S&P 500. Here's your day ahead. The rest of the week, at the top of the hour, the European Commission holding a news conference. Then House Speaker Nancy Pelosi holding her own coronavirus update at 10:45. New York Fed President John Williams speaking at 11 a.m. Eastern. Philadelphia Fed President Patrick Harker delivering remarks at 3 p.m. And then the White House's press secretary speaking later this afternoon. Finally, on Friday, we get U.S. personal income spending, and you will hear from the Federal Reserve Chairman Jay Powell. Tomorrow, you'll also hear from the Cleveland Fed President Loretta Mester on this program. Michael McKee will be catching up with her. Alongside me, we'll be catching up with Mohammed Al-Erin as well. Any questions for them? I'll be on Twitter at FerroTV. From New York City this morning, good morning to you all. Be well, stay strong. This was the Countdown to the Open. This is Bloomberg TV.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food, they're able to buy things, they're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
The lives you touch and people that you can affect, I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. Jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you use the most to send to each other?
So there's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue, and it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
Her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a Juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay. In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on t-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the Mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the Mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
There was just explosions and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for Mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, US Navy, and other branches of the US government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning, who used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the Collateral Murder Video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan War Logs, 390,000 documents known as the Iraq War Logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the US government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 US election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
People think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for
Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
From that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the US that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
even though Putin denies any wrongdoing.
US elections. Yes.
The US has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world. Yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, come to USA, 24 people went for the job. 23 people accepted. I was the only guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word, beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统建设，这方面确实比你早。但是玩信息玩软的，中国人的脑袋绝不比你们长。我们在座的所有人的脑袋绝不比你们长。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma is an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker, and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it's served him well.
2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the US, China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The US was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the US commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and US states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. Origins of the creative content of a lot of the work at Light Bright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learn so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it, and we seal seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
a bit like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. Spend cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured at Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker. So when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect a pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice, you've got to be able to judge material temperatures, you've got to just look at it and you just get a feel for it. It's a stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, you can be riding it the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives. So we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom. So as soon as I had one, I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. Take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, it's time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven. Get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
Ma Baoli, better known as Gang La, is one of the 4 Grand Marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己，我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences' virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿多不靠谱啊。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊，我看到这样的留言我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力，Blue能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同质互联网公司。
This is Rich Chiga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of predominantly Asian artists, really making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thumb. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I just kind of figure things out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. To be honest, I would even go to the bathroom here. I would take pisses here, you know what I mean? It was, it's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and just the shit that he was saying, the memes he was making. But I didn't know that he rapped or anything like that. I really didn't, and he came up with that stick 2 weeks later.
12 in the morning, pop shells for a living and baby gon' smell blood trail every minute, bro. Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just everything about it, man. Just it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. Let's do the sound check.
How was it?
It was tight.
So, Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier. It's just more entertaining. We just edit it as tight as possible, put it up, and it really worked.
Yo, this nigga got a pouch on and a Reebok pouch.
He's the hardest nigga of all time.
He said, when you come for a chigga like me. That was dope.
It's just lit, and I think people will take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, just like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chigga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it. Like, who cares? We were like, okay, let's just go crazy at the drop. So that video goes up. I go to sleep, and the next morning, everyone's doing it. Like, next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this,
it's just Taco Bell, what could possibly go wrong?
to creating something like this, the newest music video for his song Demons. Tonight, Rich Chigga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I was
here at 1.
I was the third person online.
So why'd you get here so early?
Because I want to see
I want to touch him.
What do you guys think of Joji?
He's That's my dad, son.
You guys copped the new EP or like?
Yeah. I woke up at 6 in the morning just to find that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But 88 Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh shit!
So keep an eye out for 88's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store when customers touch and feel products? And we created a concept called the connected rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards? Yes, please. Yes, please? How about there? First time we came out with B, Jade said, "It feels like I've been released from prison." Do you want these, Mrs?
Definitely.
Definitely. Right. Yeah. And she could say hello to everybody, people she hadn't seen for months.
It's
Hi,
Jade.
it's Jade. Oh.
So you can talk to Jade through this.
Hi, Katie. She's there.
Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
We've got some friends here, look.
Hiya! When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. I have a condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time. A lot of the time with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand.
Are you ready?
Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people would probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in the house with just her carers. It's quite a small world, that.
Right, so there's one of her. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do. Was that? Good. It's one of those weird things where I want to not have to use B because I want to be well enough to be able to go to those places myself. Like, it really makes a big difference to me to be able to go into school. But the thing is, with my condition fluctuating all of the time, I can't go into school reliably.
Thank you.
Today's the first day that I've been in school via B, and so far it's interesting. Still a few little things that we need to work out, but for the most part I think it's going fairly well. And it's brilliant because I can really tell the difference between today and yesterday. How yesterday I forced myself to go into school when I wasn't very well and I was really tired afterwards and ended up having loads of seizures. Whereas today I've been able to do all of the work, I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
So there is my first step of working, is to simplify root 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I've ended up letting people down quite often. B gives me hope, yeah. She's just always there. And if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I can stretch it. I can throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Myron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic world. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came for Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうと、どの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとは、キャラクターとしてすごく、YouTube とかで検索すると、たくさんの初音ミクが出てくるんですけども、元々の、初音ミクのその原点は歌声を合成する、ソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていうその、存在自体がそのボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでに、プロになって活躍している方もいらっしゃるんですけども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいになってきて、ライブも数十本、数百本だったの。そういうことが演奏によって起こせるためのそういう器みたいな感じになってくる。初音ミクらしさって僕はあんまりない。初音ミクって何だってありっていうか。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいそのテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
初音ミクって魂がないので、だからみんな魂を作り上げるために存在する。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer, but humans, they're expensive. For the rest of us, this $60 gadget is all you need.